replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce half a gigaton, remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
On season 2 of The Circuit, we're walking with the titans of banking.
Hello!
You guys love these meetings.
Yes, we do.
And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass.
That's why I'm going for, like, badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
From New York City, for our viewers worldwide, a very good morning. I'm Manus Cranny. These markets are not just counting down to the Fed, we're counting down to Tesla, which has been down for 7 days in a row, the longest losing streak since 2022. We're holding on to the green on the screen. We're going to count you down through the next hour, but the next 30 minutes takes you to the open. Coming up on the show, earnings busiest season, busiest week as we start ramping up. Futures look for direction as the markets digest the results and the Treasury yields inch higher before a flurry of bond auctions. We begin with a big issue. Earnings take center stage.
If I were to say what's a theme of earnings season so far and what we've seen for about the quarter of the market cap that's reported for the S&P, it is this. It is weak topside demand with a good defense of margins at this point. Demand is softening and weakening. Companies are doing a great job controlling the cost line and defending that margin line, but you can only do that so long.
We've had a raft of earnings from GM to Spotify. Simone Foxman is with me. Where will we land? Where will we kick off, Simone?
You know that, Manus, analysts have been pretty split about how these earnings season will work out, though they agree it is highly important. The earnings we saw out this pre-market not necessarily elucidating this narrative. We saw General Motors and General Electric both lift guidance after sales were stronger than expected, bringing to this narrative about strength among industrials at the same time as we saw PepsiCo beat on the top and bottom line, but shares are slightly lower after reporting some weakness in North America. Citi is taking the view that this is a bullish earnings season. However, they say we would view the recent pullback as a buying opportunity. Bullish positioning has unwound. The current earnings season could refocus investor attention on solid underlying fundamentals. And to that end, if you look at the EA function, the broader earnings picture on the Bloomberg, you'll see that profits have mostly surprised, especially in the consumer, tech, and industrial space. Sales more close to expectations, but when you look at sales growth for 9 out of 11 sectors, it has been positive. Of course, for the stock market, the focus is really going to be on those Magnificent Seven. We get Tesla results after the bell. Expectations there are pretty low, but much higher for Meta, Microsoft, and Alphabet, which we get later this week. Bank of America points out that there are some tough comps for these names, but the AI cycle may be a multi-year bullish push for us, and that may benefit some of these names, Meta, Alphabet, and Microsoft, Manus.
Yeah, well, certainly we're going to count down. We'll get that Tesla number out of the way later today. And then we've got to wait for NVIDIA. Once you strip out NVIDIA, those Mag 7 earnings look a little bit different. Simone, thank you very much. Simone Foxman setting the earnings stage. Also on watch today, the U.S. is set to sell a record amount of 2-year debt. Mike McKee is with me. $69 billion. Let's hope there's no indigestion.
Yeah, man, as you know what they say on bond trading desks, 60 billion here, 60 billion there. Pretty soon you're talking real money. We do have 65 billion in bills going out today, but it is the coupons that are going to get the attention. This is the last week of the quarter for the coupon auctions. Next Wednesday, we get a new refunding total, and we'll see what Treasury does. They've said they're not going to increase these, but as you mentioned, we are at record levels today, the 69 billion in 2 years. Now, a lot of this is being driven by what's happening with the Fed. When you look at break-evens over the last couple of months, we have seen as Fed expectations for rate cuts go down, break-evens have gone up, the market buying into the idea that the Fed will be higher for longer. 2-year had a little issue with what was happening in the Middle East last week, but other than that, we're pretty much higher than we were about a month ago. Now, you look at the last 2-year auction, and it was basically well received. It was 66 billion, 3 billion less than the record going out today. Went for 4.595%, and bid to cover at 2.62 was pretty much on the average of the last 5 or 6 auctions. Now, you look at the when issued today, and right now we are just below 5%. It probably means we clear at the highest, the cheapest level since October 2023. 7 of the last 12 auctions have stopped through. Even the 5 tailing auctions required relatively benign concessions, with the auction never clearing more than 5 basis points higher than the when issued yield. So at this point, we are looking at fairly good acceptance. There's the when issued. Fairly good acceptance for the 2-year auction. We'll see how the 5s and 7s go. And then, of course, the real question is what happens next week when Treasury comes out with a new list of auction totals.
Indeed, it can be a very persuasive number for the market. Mike, thank you very much. Well, JP Morgan's Bob Michael sees opportunities in treasuries and credit.
I'm trying to hang on to all my fingers and toes and keep my discipline into month end. This feels like a real month-end washout. You also still have a lot of investors wanting to take profits, or a lot of momentum investors yet to cash out. So we're really close. We're really looking at levels both in government bonds, more importantly in credit, and we feel this is a pretty good opportunity to get in.
Joining me now around the table is Mark Cabana from Bank of America. I'm tickled by that. I'm hanging on by my fingers and my toes to keep my discipline. I mean, is it as tenuous as that for you in the bond market?
So maybe not for us on the research side. We have recently been recommending that we think clients could be patient on adding duration, given recent data flow, given the fact that not all Fed speakers were on board with the cuts that some and Powell has talked about. And so as a result of that, we recommended that investors be somewhat disciplined and be patient and hang back a little bit. And we feel that that patience has now been rewarded. So we do think that it's a more appropriate opportunity now for investors to start leaning back into the market, start leaning long right now. We know that that's not a particularly popular view, given the momentum that we have seen in the market and given that rates have just sold off so sharply. But we do think it's sensible, really for 3 key reasons. Number one, we think that it's very unlikely that the Fed hikes again this cycle. Okay. Possible, but unlikely. Probably need to see inflation expectations start to unanchor. And as Mike was talking about before, we're not really seeing that yet in the break-even space. Second reason we think it's a little bit safer to lean in is because you've seen risk assets start to wobble a little bit. They clearly care and notice what the rates market has been doing. And if you see more of that sensitivity, that higher rates and let's say headwinds to risk asset development, then we think that that'll justify that lean in long view. And the third reason that we think it's safer now for investors to start leaning into fixed income a bit is that we just think positioning is cleaner. The positioning surveys that we do with our clients tell us that they're not nearly as long or as they were in the summer of last year. And that long position, investors really being over their skis on duration, allowed for such a rapid rate rise. So we do think that those things allow for investors to have a little bit more confidence leaning in. And hopefully Bob and others at JP Morgan Asset Management management agree with that because, you know, for those who have been hanging on, we do start to think that losses in fixed income look increasingly limited if, again, the Fed's not hiking, risk assets are noticing, and if you think positioning is cleaner.
There is a sense of exhaustion, and I understand that, but when you look at term premium, and it's interesting, we've got a lovely story, you look back at term premium back when we were kissing 5% back in the autumn time last year, term premium was richer. How do you view the argument that there's not enough term premium to step in? I hear your judicious argument about cautious, lean in slowly, but is there enough term premium to bring real flow?
So we think that Treasuries at the back end of the curve certainly could cheapen a little bit further. We think about the best, let's say, practitioners or tradable measure of term premia as being longer-term swap spreads. So the difference between where a Treasury cash instrument is trading in relation to SOFR a swap. And we think that that is a better measure of term premia than any model, let's say, that the Fed or anyone else has for term premia. And so it wouldn't surprise us to see that cheapen a little bit more. But in terms of what could cause back-end rates to continue to rise further, it's less we think about term premia. That's maybe a marginal story. But it's more about the outlook for inflation. And subsequently, the outlook for the possibility of Fed cuts and the low but increasing possibility of Fed hikes. That, we think, is the more important driver of the back end of the curve. So again, we do think that Treasuries are going to cheapen a little bit. You need auction concessions in order to bring in demand. You're going to probably see that this week. Maybe that's why rates have been selling off over the last few days. But we do think that if inflation starts to settle down, if you do start to see the economy moderate further, then we think that a lot of those concerns about term premium will be put somewhat at bay.
So the bumps in the road, if I look at 40-odd basis points of backup in 10-year government bond yields in the month of April, is that a sufficient bump in yield for the bump in the road that we presume will come through on PCE? At a headline level, 2.6%, but we're also looking at a bit of a nudge higher on the core. Is the repricing in the bond market already discounting a fourth bump?
So we think that the pricing in the bond market is reflecting an appreciation of the fact that the economy hasn't slowed as much as we thought. Inflation has not continued its trend that we saw in the second half of last year lower. And as a result of that, we think that the bond market is recognizing that monetary policy shouldn't necessarily ease, or we shouldn't see those cuts as fast as was previously anticipated. And as a result of that, look, you're seeing that risk assets, as we discussed before, are noticing. Consumer confidence as a result of that is probably also noticing. The extent to which that feeds through into spending and other activity is yet to be seen. But we certainly do think that higher rates, slightly more restrictive financial conditions should assist in helping slowing things down and get inflation on a more consistent downward trajectory, though the timing of that is very, very unclear. What we think is less likely is to see a real sharp, sustained increase in inflation from here. That and a subsequent unanchoring of inflation expectations are probably required to get the Fed hiking again. But otherwise, we think that the Fed can be patient, stay right here, and that risk assets will probably continue to notice.
Let's square it away. I mean, Larry Summers put the tail risk of a hiking, and you've been very clear, it's not at all in your base case scenario, but he's moved that up to 15 to 25% of a possibility. I mean, how much conversation are you actually genuinely having about war, having a war game on higher rates, on a hike?
So it's a very real discussion point amongst clients.
Okay.
It's I don't know that it's anyone's base case right now, but after the CPI print that we had just about 2 weeks ago, there was a discernible shift in at least our client feedback and the questions that we get from clients. It was almost a joke to contemplate that the Fed could hike again prior to that CPI print. But after it, it became a very serious discussion point for clients, and they want to know, what would it take for the Fed to hike again? In terms of the probability that you put on that, I think if you look at the end of the year, the market's pricing in like less than 15% probability of no cuts from the Fed this year. So it'd have to be less than that they actually hike. I would think maybe 5%, 10% on a market implied basis. So Larry Summers' 15 to 20 seems a little high in relation to the market. I'm not going to give you a specific probability right now, but I don't think that the market pricing at the moment looks necessarily wrong for the relatively low odds that it would imply on another Fed hike. And again, for fixed income and for fixed income asset managers, this is so important, right? Will the Fed hike again? Because if they don't hike again, and if you've got confidence in that, then really leaning into fixed income limits your downside. Think about it this way. So the 2-year is going to maybe price with a 5% handle at the auction today. If the Fed doesn't do anything for 2 years, where will the 2-year note actually realize? Probably around 5.35 to 5.4%. So yes, you can see a little bit of further cheapening, but you've got limited downside. And what's the risk that something unexpected happens that could see the economy slow? That's what we think the market is still pricing a fairly decent probability of in the market today.
Well, coupon clipping at 5.4%, if that's your worst case scenario, is not exactly a tragedy, is it?
That's right, nor is coupon clipping at 5%, right? So why not take the shot with the risk that maybe the economy does slow unexpectedly, or maybe inflation does fall, and maybe the Fed is able to deliver a more aggressive pace of cuts.
Mark, we get the message, maybe a concession today and over the week in this auction, but certainly no indigestion. Good to see you this morning.
Thanks so much for having me.
Mark Cabana joining me with his outlook on the bond market. We're ahead of the opening bell. Abigail Doolittle is side by side with me on the movers.
Well, Manus, we have a big decliner on the morning, despite the fact that we have futures higher. We have the shares of JetBlue absolutely plunging down more than 15%, heading to what I believe is their worst day in at least more than a year. They warned of less revenue and higher costs in the year ahead, and apparently excess flying capacity in Latin America really a problem. Analysts saying that their results just not on par with the competitors. As to what's helping the stock futures go higher today, GM shares are higher in a big beat, and they also boosted guidance as truck sales overshadow weakness in China. More on this on the open. Actually, UPS, down about 6 cents of 1%. Not the strength that I was talking about for GM. Lockheed Martin, on the other hand, up 1.2%. A big beat and raise for the defense contractor. And then Spotify, Manus, take a look at this stock, up 12%, up 45% into today, year to date. They beat adjusted earnings by 66%, putting up nearly $1 in adjusted earnings. Subscribers to paid Spotify tiers grew 14% year over year. Again, that stock soaring and set on the year to open up about 60% year to date.
Abby, thank you very much. Coming up in the show, we'll dig deeper into the GM. It cruises along. Analysts predict more pain for Tesla.
Tesla can't seem to get out of their own way, right? Their stock doesn't meet our selection criteria. Let's them take them out of the Mag 7 altogether.
Auto sector in focus. That's next on Bloomberg.
Season 2 of The Circuit. We're walking with the titans of banking.
Hello! You guys love these meetings.
Yes, we do. And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money. You've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging on for dear life.
You driving a Hummer is pretty badass.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Tesla can't seem to get out of their own way, right? They've cut jobs, they've cut prices, they've abandoned the production of their lower cost vehicle. And now we've learned, at least last quarter, that global deliveries fell for the first time in 4 years. Their stock doesn't meet our selection criteria. Let's them take them out of the Mag 7 altogether.
So in case you hadn't got it, it is all about auto earnings this week in focus. General Motors boosting their outlook as strengthening U.S. truck sales overshadow the losses in China. Now, the attention pivots to Tesla, the second worst performer on the S&P 500 this year, gearing up for their earnings after the closing bell. Craig Trudell is with me. My guest this morning, Craig, said kick Tesla out of the Mag 7. What is it going to come down to on this earnings print today? Craig?
Yeah, I think to your guest's point, the concern about the $25,000 car going out of the window is a lot of what's going on here. But we also shouldn't overlook the fundamentals. This is a company that the revenue, the earnings, the gross margin, the free cash flow, everything's trending in the wrong direction. And there's a lot of concern about, can this company sort of fix its existing business as it's making this, massive bet, high-risk bet on robo-taxis that, we mentioned at General Motors, they've had quite a bit of challenges with doing precisely what Tesla's trying to do with their cruise business. And it's really remarkable to see the trend in the last few months when GM, their cruise business, was grounded. They focused on returning cash to shareholders, put off some EV investment, and we've seen their shares outperform Tesla to a significant degree.
Yep, and certainly I think he or she who wins the SUV market, whether it's electric or otherwise, sort of wins the war of profit for now. Craig, thank you very much. Craig Trudell there, obviously GM guiding higher. They see $9 to $10 in earnings. Originally that was $8.50 to $9.50. My next guest writes this. Tesla's death spiral is increasing in velocity as Musk shops around on a monster fundraise for yet another company of his, that is XAI. Let's have that conversation with Clio Capital's Sarah Kunst. She joins me now. Sarah, I mean, if I said Tesla was in a death spiral, I'd probably get into trouble. But you are in another part of the market, so you have latitude. Is Tesla really in a death spiral?
It certainly looks that way. We are seeing that stock that has gone from strength to strength, largely just on the basis of Elon, right? They didn't invent cars. They didn't invent electric cars. And now there is a lot of competition in the electric car market. It's been waning for a while. And, I think that a lot of us are overlooking some of the risk that are going on inside of Tesla with this potential move to Texas, that seems to be a way for Elon to bring that monster pay package back to the table. But the reality is that it was struck down in Delaware for a reason, and there's real sort of issues most likely if he pursues it again in Texas. And so I think that there are a lot of different problems happening around Tesla. Certainly the macro, EVs are not doing well in general, have just created an environment where it feels like he's focused a lot on his other companies, obviously X and XAI. And so I just don't know if the Musk magic is still there.
Peak Elon. I mean, it's almost like, Thatcherism, Trumponomics, and then there's Muskism. It's a question of whether you believe in that. Would you be more sated if we had an AI day, the AI story, autonomous driving, Optimus, etc.? Would you be more inspired if you understood what the AI component was really within Tesla and the monetization prospect of that?
Here's the problem, right? I do understand it. And the reality is that we can look at companies like Alphabet and what they're doing, with their self-driving cars, which that's generally what you're talking about when you're talking about AI in cars, the ability for the car to operate more autonomously. Ford is doing a lot of interesting things on that front. Cruise, certainly at GM. And so we can see that, right? When you're in San Francisco, the self-driving cars are everywhere. So we know what that looks like. And the reality is it doesn't really play to Tesla's strengths. And candidly, nobody's making a lot of money right now from AI and self-driving cars.
No, it is very difficult. Let's just shift the conversation along because Congress has now voted on TikTok, and there's a whole lot of discussion around the demise of TikTok. What will TikTok be if it's sold off from ByteDance? Where will the algo go? But I want to understand a broader construct, which is the others who benefit as we have TikTok angst. Now, if I look at Meta, I mean, it's just way, way ahead on Reels. 200 billion views on Reels, and Alphabet has YouTube. Is TikTok's prevarication about TikTok the opportunity, the ultimate opportunity for Meta and Alphabet?
It certainly is an opportunity for Meta, probably bigger for Meta than Alphabet, just because, while YouTube Shorts has certainly done decently well and people spend a crazy amount of time watching YouTube, it doesn't monetize YouTube as much. Alphabet doesn't. But when you look at Meta, yes, I think that when creators get worried that their livelihoods are going away, when brands who depend on TikTok to get their revenue see that, hey, it might go away, they have to be pragmatic and say, where else can I go? And the reality right now is that that's primarily going to be Instagram and Reels, their short form video product. And so I think that we will continue to see a flight to that relative safety. I think we'll also see companies, new startups, try to come up with entirely new companies that sort of ride the wave of, hey, what are people going to do with all their free time if TikTok's For You page is gone in the US? But thus far, I'm not seeing a lot of investors really lean into that thesis, in part because it didn't work really the last time around when TikTok was set to be banned.
Sarah, thank you so much. Let's see what those numbers are from Tesla a little bit later on, whether we can convert you in any way. Coming up, your morning calls. Jen Trust's Mimi Duff joins me, makes the case for bonds over stocks. That conversation next.
Fixed Income Fix. Watch Bloomberg Real Yield at its new time Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Was going to keep reading World Cup. This is a three
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Some morning calls for you. Truist upgrading Penn Entertainment to a buy, saying the markets are underestimating the prospects for ESPN. Next, you got Wolf Research downgrading Warner Brothers to underperform, pointing to profitability headwinds and disappointing studio results. And finally, JP Morgan downgrades Five Below to neutral. Caution on the consumer.
the linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Markets are putting in a bit of a heroic performance. Go on the Jeep. In the end of the day, the SUV is the bulwark for Ford, for GM. That's got a lovely rising tide, setting the tone on the reporting season. Can the Tesla numbers, can the Mag 7 actually deliver? So a bit up on stocks. We've got a Monty of an auction coming along, $69 billion of 2-year government bond yields are going to hit the tape. The dollar is flat. The euro is up ever so slightly. Private sector activity advancing to the highest level in almost a year, and so the euro is a little bit higher. There you go. GM up 5.5% before the bell. We just rolled it over into the opening session. Yields cheaping up by 2 basis points. We've just had Bank of America here. You may have to see a little bit of a cheapening in the concession in the auctions this week to get the paper away, but no material risk. Lean in gently to duration. Oil down by 0.5% at the moment, 81.55. The war risk premium has dissipated ever so slightly. I mentioned the SUVs were the alpha in the reporting story for the car makers. GM is there expecting better profit this year on those truck sales in the US, led the automaker to raise its 2024 guidance by $500 million. Abigail Doolittle, have you got a truck, Abby?
I do not have a truck, although I do have an SUV, so I guess I'm in that larger car category. But investors really liking this quarter and the outlook, Manis. The stock up right now about 5%, the best day going back to January. They put up a very nice beat across the board, adjusted earnings of $2.62, 24% better than expected. Revenues of $43 billion, 2% better than expected in a difficult environment. And you were mentioning that they did increase guidance from a net income standpoint by $300 million for the year to between $10.1 billion and $11.5 billion. So some positive cheer there. CFO Paul Jacobson giving some good color, saying the U.S. consumer, despite rising rates, remains very resilient. They also mentioned, he also mentioned that pricing was about flat in the quarter. So it seems as though there's some pricing resilience there. It could erode as the year goes on. But again, the net income, they seem to be managing any sort of issue there that could happen. And all this U.S. strength, well, it set off some of the China, offset some of the China weakness given the competition in China from some of the Chinese car makers. Into today, Manis, the stock up 20% year to date. A banner year so far for GM.
Yeah, well, you just put that relative to the no man's land of Tesla down 40% and you begin to understand the gap. Abby, thank you very much. Let's turn to the shipping industry. UPS reporting higher profit as the result of headcount management and restructuring of its delivery routes. Katie Greifeld is with me. So some subliminal terminology there for job cuts.
Yeah, perhaps, but you take a look at what shares are doing this morning. They're up slightly, so let's get into some of the numbers here. Adjusted first quarter earnings were $1.43 per share. That is above estimates. Analysts had been looking for $1.30 a share, so it beat there. UPS also maintained its guidance for the full year. Of course, UPS, it's been trying to expand its sales and profit. Demand has been a little bit softer for package delivery coming out of the pandemic. It said last month that it expects consolidated revenue to climb as high as $114 billion in 2026. That is up 25% from last year. Meanwhile, though, you take a look at what the sell side is saying. It's not too warm, I would say. You have Morgan Stanley saying that while this appears to be a healthy beat and may spark a modest relief rally, we doubt that the numbers will come up or the market would consider this to be a turnaround in the recent negative momentum in the numbers. Meanwhile, I take a look at Evercore ISI expressing some skepticism about whether they're going to be able to meet their forecast. They say that the results, they do show upside to recently lowered earnings estimates, but the stock's path over the near term will depend on the path to meeting full year guidance. Again, shares up a little bit today, but still down for the year, Manus.
Okay, Katie, thank you very much. Katie Greifeld there on UPS. To the airlines, JetBlue's forecast for the second quarter and annual revenue, they're worse than anticipated, citing excess capacity in the Latin American region. Isabel.
Hey, Manus, investors are really not liking this because shares tumbled as much as 20%. That's the biggest drop since March 2020, and shares have since pared some of those losses, but still down by 15%. If this continues, JetBlue is on track to shed some $400 million in its market cap. So the airline lowered its 2024 revenue, and this is a setback because JetBlue is trying to return to profitability. So JetBlue reported revenue that will fall as much as 10% year over year, and that's compared to the 3.8% that analysts have average estimated. So a Citi analyst said that the guidance for the quarter and the full year were not nearly as strong compared to its peers. And this could cause JetBlue to, quote, relinquish some of its recent share price gains. And indeed, Manus, JetBlue's rivals like Delta and United have forecasted profits, strong revenue, and record demand this quarter. But just like its rivals, JetBlue also had the same problem in Latin America because they put too many flights there, especially in leisure destinations. But for now, it's really been a tricky year for JetBlue. Recall that earlier in the year, they had to call off their merger agreement with Spirit after a judge blocked the $3.8 billion deal on antitrust grounds. For now, shares are still slumping by around 15%, Manus.
Okay, Isabel, thank you very much. Isabel Lee on the JetBlue earnings. Now to Apple and the iPhone. Sales in China fell 19%. That is the worst performance since 2020. The data comes from an independent research firm. Ed Ludlow is with me. I mean, this is a confirmatory note, really, isn't it, Ed? We've had a couple of assessments of the demise of demand in China. So what is today's new news?
Well, there are some idiosyncratic factors because the first 3 months of the year include the Chinese Lunar New Year. And that has historically been a time of strong sales for Apple. The Counterpoint research data does show a drop of 19% year on year in the period, and idiosyncratic in the sense that unusually Apple actually offered quite significant discounting and incentive to try and bring those consumers in, and that didn't work. The bigger picture is that the Counterpoint data also gives us an interesting picture of market share in China. Apple has fallen to third in the smartphone market, but it's interesting to note the gains that Huawei is making in the higher end of that market. They basically now have very similar market share of around 15.5% each. So that is the other part of the story where Apple is facing increased competition. The moment you started reading the intro, I don't know if that was it, Manus, but the stock actually paired its early decline. It's basically flat down a percentage point, but a tenth of a percentage point, but it is a few tenths of a percent away from its lowest level in a year. We're not that far off from earnings. And again, stressing that this is third-party data, but it's third-party data kind of in line with what IDC told us a couple of weeks ago, which was overall iPhone shipments in the first quarter were down 10% globally, with particular pain points in China. There's a growing thesis on the street and presented by Bloomberg's Mark Gurman that the high end of the smartphone market's getting tough. Do we start to see a really, really cheap version of the iPhone to go after volume in new markets like India and elsewhere? That will be a question for earnings, down 0.2%.
The democratization of the iPhone, it comes at a cost of price, doesn't it, going down the scale? And thank you very much, Ed Ludlow, on the Apple story. My next guest weighs in on the future of the rates market, saying this: our primary concern is that large swathes of the economy are not workable at these restrictive rates for long period of time. And that leads us to have higher than expected recession risks penciled in relative to the market. Mimi Duff is going contrarian, Managing Director of Gen Trust. It's not full contrarian. I think what you are doing is raising the flag that the whole market is so bulled up that there's a risk. In your view, there is a risk of a recession. My question would be to you, is that a building contrarian narrative, and how bad a slowdown can it be?
Yeah, I mean, look, we see a clear possibility for just more of the same, which is pretty strong growth. We'll see that data on GDP data this week. Inflation is above trend. There's a lot of optimism priced into equity markets. We're going to get 40% of the S&P reporting this week. We'll get a lot more information on that front. We'll see the PCE data this week on the inflation side. But, you know, if we get more of the same, it's hard to argue that the Fed should be an easing stance. And the market has repriced to greatly diminish those odds of easing this year. So on the other side, if we stay at 5.5% base rates for an extended period of time, we do think, like commercial real estate, for instance, you've got $1.5 trillion that needs to be refinanced in the next between 24 and 25. Residential. Current homeowners are in fine position right now, but it's decreasing mobility, for instance, with mortgage rates at 7 or 8%. So those are just some of the kind of things that we see risks on the horizon.
So the refunding, now, I mean, the narrative was this, is that the refunding was something that would take place in 2025. The mortgage market, the retail person like you and I has already remortgaged, and they have a pretty good rate. So you're putting this recession risk into 2025 if we do not have insurance cuts from the Fed. Is that the correct way to think about the warning?
Yeah, I mean, the longer we stay at these restrictive rates, most folks would not argue that 5.5% base rate is pretty restrictive. The longer we stay here, it is going to weigh on these segments of the economy. For now, consumers have been fine, but their savings have been eroded greatly. So eventually, I think it's going to come to the forefront.
So tell me then, are you tempted? We've got a little bit of 2s, 5s, and 7s this week. Everybody's telling me the auctions may cheapen up a little bit. You shifted to an overweight, but you remain short on duration. Just give me the construct of where you want to be on the curve.
Yeah, so we like that 2s, 5s, 7s. The duration of the index is something like 6.8, and our durations are shorter than that, with 2 years up around close to 5%. And you know, we think that these are levels that the duration this week will be digested, and closer to 4.8% in 10s, we would look to square up in terms of being neutral duration as well.
And the equity portion, I mean, as you said, we'll know an awful lot more. You know, it's like the sort of Damocles, isn't it? Tesla tonight, what happens with a little bit of Microsoft, etc. You know, you'll get a smack and a boon, won't you, this week in terms of some of the big names. But with equity at the moment, the left tail risk is rising. It's not equity markets are not collapsing, but they are nervous, aren't they?
Yeah, I mean, look, we're long-term, long-only, and so our portfolios have healthy allocations to equities, but we have recently shifted to underweight given the construct that the full picture that we're seeing.
And in terms of the actual defensive nature, if the left tail risk is rising, where do you see the biggest defense? Do bonds suddenly take on that hallmark again of a resort, of a haven? We saw it last week very clearly when geopolitical issues came to the fore. But when you look at the fixed income portfolio, does that become slightly more haven-like?
Yeah, that's our hope, is that if equities do falter, the fixed income will perform. And yields are high enough right now that you should be able to earn that yield over time as well. It's not costing you a great deal to have healthy allocations in that area too.
Okay, Mimi, thank you so much. Let's see what the big beasts of tech give us over the next 24 hours, because it will be certainly a decisive note for sentiment on big tech. Speaking of which, coming up, TikTok, the bill is heading to the Senate.
The House put everything together to also try to force the Senate to vote on some of these things. As we all know, the Senate has been holding up a vote on the TikTok ban. The House deliberately put it into this package to make sure that the Senate would vote on it.
Lawmakers prepare for procedural votes. That conversation ahead on Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking? I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything. To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
The House put everything together to also try to force the Senate to vote on some of these things. As we all know, the Senate has been holding up a vote on the TikTok ban. The House deliberately put it into this package to make sure that the Senate would vote on it. And that's why we expect everything to pass this week in the next day or two.
The House's strategy for the Senate. And the Senate will vote on the foreign aid package set to take place today. And that includes aid for Ukraine, for Israel and Taiwan, and the bill that would force ByteDance to divest from TikTok. President Biden tells Ukraine's Zelensky that aid will flow quickly if the Senate approves the package. Anne-Marie Hordern is with me now. So, Anne-Marie, this is a pivotal day on the voting. Are we in any doubt on any aspect of this quad?
There's really no doubt that this larger package that was voted in smaller packages in the House is going to go through. The only question is a matter of when. How long do they draw out debate on this bill? So potentially can happen today, or maybe this will bleed a little bit more into the weekend. Remember, the Senate is supposed to be on recess, and they're coming back, senators, coming back to Washington today to vote on this bill. You saw President Biden speak to Zelensky yesterday, and they have been preparing for when this actually got voted on to make sure that weaponry goes out. Of course, everyone is excited to hear about potentially the debate on TikTok. Ron Paul over the weekend was talking about how this is a ham-fisted assault. His words when it comes to TikTok. But let's see, even if this goes through, it means a year to divest or therefore to be a ban, but this can get drawn out, of course, in the courts and the legal proceedings that TikTok is preparing for.
You need that TikTok going into this election. I'm big on TikTok. Now, talk to me about handbag wars. The FTC has sued. They're going to stop the group Tapestry from acquiring the rival Capri. The ticket size, $8.5 billion. I mean, I'm being a little bit disingenuous, handbag wars, but why? Why has the Biden administration decided that it's in its interest to step into handbag fashion?
Well, there's one thing that we hear from the FTC is this is to make sure that there's competition when it comes to workers and wages, and this would just be a larger group of 33,000 people. Potentially that preservation of the labor market is something that we have seen also in the past Lina Khan lean on. But we should note that this Biden administration, we've seen a record amount of antitrust enforcement under Lina Khan and Jonathan Cantor of the DOJ. So this isn't actually an administration or FTC that has been friendly to deals. And this is just the latest in a string of deals that have been sued or pretty much got blown up by this FTC. And what is so precarious to me is the fact that this deal between Tapestry and Capri had the go-ahead from regulators in Europe and Japan, but it's being stopped short in Washington.
Yeah, and there's the other side of the trade, which is it creates a much bigger luxury beast here in the United States of America, perhaps not at the size of LVMH, but one could argue is that it creates, a significant competitive galvanized force. Anne-Marie, thank you very much. Anne-Marie Hordern on the politics of Capitol Hill and M&A. Some breaking news coming across the Bloomberg Terminal for you. Let's get back to Mike McKee. These are on the PMIs with some in Europe. How does it look in the United States of America?
Not so good, and that is actually causing a big market reaction right now. The S&P Global PMIs for manufacturing come in at 49.9 in the U.S., down from 51.9. That is the lowest since December. Services PMI at 50.9 comes down from 51.7, the lowest since November. So we are seeing some weakness in the United States that we don't normally see in these indexes, at least compared to Europe. Europe earlier today was showing some weakness in manufacturing, but services ticked up. So this is having an impact in the bond market. As you can see, we've got the two-year note gave up 6 basis points immediately and now has come back just a little bit. But the comparative interest rates in the two areas are going to make a difference to, it appears, to bond traders. And it'll be interesting going into the two-year this afternoon, the auction, to see if this carries over.
Well, there is the immediate bond reaction, which is yields down. 4.95 is where we are on the 2 years. People are talking about a cheapening up of the concession, $69 billion worth of two-year auction paper coming to the market. As you say, this is a little bit of a shock on the back of the April 8 PMIs. Mike, thank you very much. We'll get some sector price action now. It's a big day. Lots of sectors in focus, from autos through to travel. Abby, what have we got?
Well, not surprisingly, with the S&P 500 up about 0.6%, getting a boost off of those weak PMIs, up for a second day in a row. The best 2 days, Manus, surprisingly, in 2 months, up about 1.5%. So the selling that we've seen recently, not out of nowhere. But take a look at all the sectors that are higher. Communication services, the best, up 1.1%, being helped out by the likes of Meta, Alphabet, Verizon, Netflix, Take-Two. So lots of strength there. Industrials, utilities, healthcare also higher. To the downside, materials down 1%, and then energy down about 0.4%. One area that we have not looked at in quite some time, that is the NASDAQ Golden Dragon Index, basically China tech shares. This index over the last 2 days, it is up 3.7%. So some really impressive gains there. And helping out today, the likes of Alibaba, JD.com. And for this index, those are the best 2 days. I'm just waiting for the Bloomberg terminal to spit the number out since March 13th. So we have some U.S. big cap strength, and we also have some China big cap strength, Manus.
Abby, thank you very much. Coming up with market moving events that we're going to set your trading diary by and bonds will feature heavily.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Talked a lot about the divergence in terms of macro policy between Europe and the United States of America, but this is the differential. The bond market is showing you when you get weaker PMIs in the United States relative to Europe, there's no irony lost in that. We're looking at the PMIs, U.S. business activity expanding at the slowest pace this year. Now, this looks a little bit more dramatic. It's only a couple of bips lower, but you've got $69 billion worth of two-year paper coming to the market later on in terms of the auction. So this is just one of those moments where there's a tiny fissure in the economic story. I'm going to set your trading diary for you. I mentioned the bond auction, $69 billion worth of two-year paper will come. That will feature. The auctions will be at 11:30 p.m. and 1 p.m. Of course, it's about Tesla and their earnings. We then flick over to IBM and Meta out with their results tomorrow, but not before we've talked Tesla into the ground. Thursday, Alphabet, Microsoft earnings, plus US GDP, and another round of jobless claims. It's going to be interesting to see what those jobless claims once we've had those PMIs just incrementally lower. The employment component, by the way, sliding to 3.2 from 48. Flick it over to Friday, and we get University of Michigan sentiment survey and the PCE deflator. That will wrap up the sentiment for the week. It could also be the death knell in rate cuts for 2024, or certainly a repricing of those. That was Countdown to the Open with me, Menace Cranny, from New York on Bloomberg.
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Alex Steele, she is on vacation this week. I'll be joined in just moments by Emily Garfeo from Bloomberg News. She'll be joining us for the next couple of hours. We're going to check in with Ira Jersey, Bloomberg Intelligence U.S. interest rate strategist, get his thoughts on where this Federal Reserve is going to go. I mean, I got the two-year note. We're now at 4.93%. We were touching 5% earlier, so we get a sense of where we're going with rates. S&P, we got some PMI data coming out today, a little bit weaker than expected. We'll break that down. And we're also going to check in with Lee Klaskow, Bloomberg Intelligence Senior Transportation Analyst, talk about some UPS earnings, and I'm going to just talk to them about railroads and trucks and shipping and all that kind of good stuff, the supply chain. So we'll check in with Lee Klaskow. But first, we're going to start it all out with Lisa Mateo and get a Bloomberg Business Flash. Lisa.
You got it. Market Drivers brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. All right, stocks continuing the momentum from yesterday's advance. Right now, we have the NASDAQ up nearly 1%, the S&P 500 up 0.7%, the Dow up 0.4%, or 161 points. The two-year yield at 4.94%, down 3 basis points. The yield on the 10-year at 4.59%, down 2 basis points. To commodities we go. Right now, we have spot gold higher at $2,328 an ounce, Brent crude at $86 a barrel. Some more economic data out today. New home sales for March. Now, the survey was for 668,000, came in at 693,000 for March, a little tick higher. But all eyes, yes, on earnings this week. There's plenty of it to get through. About 180 companies reporting this week, representing over 40% 1% of the S&P market value. I want to hit one of them now. We'll go to PepsiCo. Their shares are lower, down 2%. It posted better than expected sales growth. That was strong demand in international, but volumes in North America dropped, and that's why those shares are lower. After the bell, all about Tesla. Their shares right now up 2%, expected to post a 40% operating profit decline. We shall see. That is your Bloomberg Business Flash. Back to you.
All right, Lisa Mateo, thank you so much. We appreciate that. Paul Sweeney here. Alex Steele is on holiday. Emily Grafeo from Bloomberg News is going to join us in just a little bit, so that'll be a good thing. We're in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. You can just click on that live screen, and boom, there you go here. As Lisa was just mentioning, a little bit of a lift here to the market. Lots of earnings today, tomorrow, and Thursday. Busy, busy week for earnings. Let's see what's happening underneath the hood for these equity markets. Nora Melinda, she joins us here in our Bloomberg Interactive Broker studio. She's from Bloomberg News, covers all the equity markets. Nora, what are you looking at today?
So many earnings today, but I want to take a look at Spotify. I'm not sure who you listen to, if you're an
not
Apple Music guy.
I'm not a Are you a Spotify person?
I am.
Yeah, my kids are Spotify people.
Yes, yeah. I mean, because you get the Hulu package, the combo.
Do you?
They have a combo package.
Okay.
But anyway, those shares are higher, jumping
wait, look at that. Yeah.
as much as
12.5%.
Yeah, it's pretty strong here, and it did rally almost to $315 this morning. That's the highest since March of 2021. Now it's on track for its best day since July of 2022, and this is all coming after it reported a great profit. It's showing that it boosted subscribers and added new features, and that's really caused the company to jump. And we're seeing those shares up as much as 16% in trading this morning.
Yeah, pretty nice. I'm just looking at the stock again. The high was back in early 2021, around $360 a share here. Then it came all the way down to below $100 a share. Boom, come ripping back here.
It is.
So it's, I mean, this is, the streaming music business, like a lot of these streaming services, it's a subscriber growth story, number one. Number two, it's how much revenue you make per subscriber. And boy, they put us some good
They did. They
metrics
posted
today.
some good digits here.
Yeah. All right. Good stuff for the Spotify. That was a really good IPO. I remember covering that IPO, and it's a good management team. It's just a good, tight story.
They're roaring.
And they compete against Apple.
Exactly.
Which is amazing.
Which is so hard to do.
I know. It's just
but
amazing
they're
how
keeping up.
they do.
But I wanted to move over to JetBlue. On the flip side here, that company is plunging. Those shares are plunging double digits. It opened down about 20%. Now it's pairing, it's down about 10% here, but it was earlier heading for its worst day in more than 4 years. Now this is coming after it forecasts worse than expected sales this quarter, and it's really blaming it on the flying capacity in its very critical Latin America market. Now Citi analysts are saying that this could cause JetBlue to relinquish some of its recent share price gains. So of course, this is a major setback, especially as we think about how it's really hoping and pushing for a return to profitability. But what's interesting here is that it's not alone. I mean, Delta and United also reported weaker sales in the Latin America unit after saying that there's an overload in the key market with too many flights to leisure destinations. And this is really keeping those fare prices down.
Yeah, it's interesting. Maybe we'll talk to George Ferguson a little bit later at BI, who covers the airlines. But I kind of thought airline travel was still strong, but I guess it's just kind of shifting where people are going. And I know JetBlue, it's got a lot of reliance on Latin America routes.
Exactly. I mean, I was just on 2 back-to-back flights. I was in Uganda last week, and then...
What are you doing in Uganda?
Family.
Really?
Family, yes.
All right, how do you get to Uganda from New York?
I went from New York to Amsterdam.
Okay.
From Amsterdam we stop in Kigali, Rwanda for an hour and a half, and then you head over to Kampala, Uganda.
Wow.
22 hours.
Nice.
22 hours.
How was it?
It was great. It was amazing. It was amazing.
That's good stuff.
Back here.
Okay. So JetBlue, I'm looking at JetBlue, the FA screen on JetBlue. Analysts are still looking for a net loss this year of about $250 million, and then maybe break even a little bit better in their calendar 25.
Yeah.
Okay.
Really interesting stuff.
All right. I mean, I'm a United person because I live in New Jersey, so I fly out of Newark.
Right.
I don't think I've ever flown JetBlue.
Really?
Yeah.
I haven't either. I don't know why I'm acting surprised.
Okay. Well, we'll see. But again, a lot of people like it. All right. What else you got?
I mean, I wanted to look at UPS. Of course, we'll be talking about it more later today. But those shares are up as much as 3%, pairing a bit here now. But it reported profit that came in higher than analysts expected. And this seems to be due in part from that headcount cut that we saw earlier this year. And of course, this is really interesting. The company did announce a deal earlier this year, of course, when we think about USPS, to become its primary air cargo provider, replacing FedEx. So, I mean, it's really interesting here as we're watching these shares. They are popping a little bit off of this news and seeing those earnings come through.
All right. I mean, the big thing there, I mean, yeah, we'll talk to Lee Klaskow from Bloomberg Intelligence in a little bit, but I remember just reading Lee's research and talking to him. It's all about, kind of the volume you can put through your system. And average daily volume in the U.S. showed improvement through the quarter. Chief Executive Officer Carol Tomei said in the statement, looking ahead, we expect to return to volume and revenue growth.
Right.
Okay.
I mean, and we are seeing that EPS beat. I mean, they reported $1.43 per share. The forecast was $1.30.
Yep. All right. So good news on the earnings front there. Again, the big earnings is going to be Tesla after the close here.
We can't wait.
No, and I don't know. It's 5:30 call. I don't know where I'm going to be. Probably walking on the boardwalk down the shore, but I'm going to be plugging in and listening.
I'm going to have my phone up. I'm going to have my earpods in. I'm going to be listening.
I don't know what he's going to. I don't know what he could say. And we're going to have Dan Ives on Bloomberg Surveillance tomorrow.
Good.
And Dan is probably one of the biggest Tesla bulls out there. Wow. And he's always had to deal with this Elon Musk risk, which rears its head every once in a while.
What do you say?
And what do you say? And so I'll be interested to see. But even Dan said, hey, this is a make or break call for Elon Musk. It's a make or break call for the stock here, at least in the intermediate term. So we'll see what happens.
Something nice.
Yep, exactly. Down about 43% year to date is Tesla. Norma Linda, thanks so much for joining us. Norma Linda, she covers all of the markets for Bloomberg Intelligence. We appreciate that. Taking a look at the 10-year Treasury. Earlier this morning, we were at 4.99% on the 2-year Treasury. It's backed up a little bit. We're down now to 4.92%. But again, the question when we're thinking about the Fed here is, what does the Fed do? How often do they cut rates in 2024, if at all? I guess that is still on the table. And when do they start? So let's check in with Ira Jersey. That's his job to kind of answer those questions. He's the chief U.S. interest rate strategist at Bloomberg Intelligence, joining us from Princeton. Hey, Ira, let's just start. Is there a realistic scenario in your mind where the Fed doesn't cut rates in 2024?
Yeah, I do, and I think that the chances of that continue to grow as we have pretty decent data. The market's rallying a little bit today, just on the back of some disappointing S&P PMI data. But generally speaking, the hard data, as opposed to the survey data, which the PMIs are a survey, the hard data has been continuing to be pretty good. So whether it's inflation data or retail sales or the employment reports, you can see the growing tail risk that the Federal Reserve never cuts interest rates this year. We had always been a bit more conservative than the consensus here at Bloomberg Intelligence, thinking that the Fed would only be able to cut 3 times this year, whereas a lot of the market was pricing for 6 or 7 cuts and the like. Anna Wong at Bloomberg Economics now thinks only 2 cuts this year. I think that that's a growing possibility too. The challenge here, Paul, is for the Fed is they don't want to wait to cut until it's too late, right? Yeah. So because they don't want to have to cut, 50 basis points at a clip like 3 or 4 times in a row. So they'd like to be able to, I think, to lower interest rates a little more gradually than that. But they're going to find it hard with the data as strong as it has been.
A lot of folks, Ira, I'm not sure if you're in this camp, but a lot of folks in academia and in the marketplace, practitioners say, hey, if you look at the real-time data, inflation's already down to 2% or something like that. Let's start cutting rates now. But I would guess that the Fed looks at some other data points, some of that look behind data, look past data, and maybe they're not there yet, I guess.
Well, so the inflation's certainly much lower than it had been in 2022 and last year, but it's still kind of lingering at levels that I think are inconsistent with their 2% target. I think if the Fed had a more flexible target, they could more easily make the case that they could start cutting interest rates soon as June, probably, maybe July. But that gets more difficult when you say, look, we want to get back to our 2% target, and when you wind up having year-on-year inflation is going to wind up being actually helped with some base effects in the next couple of starting in the midsummer. It's going to be difficult for them to make the case that they should lower interest rates with 3% inflation. And when you look at the services sector in particular, you continue to see pretty decent price gains there, even excluding housing, or especially excluding housing. So you still have a lot of wage gains pushing prices higher, which again, then people ask for more money, so you wind up having decent wage gains. So we're not quite at a wage push right now. I think we had been a couple of years ago, but nonetheless, the economy is still doing pretty decent. And again, you look at the hard data, and the hard data is good. The survey data is not as good, which I think is an interesting dichotomy, because people are still spending money even though they're not as optimistic as they had been a couple of months ago.
Just finally, Ira, Friday, the big data point will be the PCE core deflator. I guess month on month, the consensus is 0.3%, kind of where it was last month. If it comes in that regard, how do you think the Fed takes that number?
Well, 0.3, if you annualize that, is well above 3% inflation, right? So that it's going to be, again, difficult for the Fed to cut. We'll actually get a pretty good idea about what that number is going to be on Friday. On Thursday, because Thursday we get the first cut of the GDP report. So the March personal consumption numbers and the deflator number has to be known by the time you get that March data print on Friday. You get the full quarter print on Thursday. So it's going to, I don't know why they don't just flip the days that they report those, but it's one of the oddities of the data reporting that the Bureau of Labor Statistics does. Yeah.
All right, Ira.
Or excuse me, the BEA, I should say. Does that,
exactly. All right, Ira, thanks so much for joining us. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira was referencing early some PMI data came out here from S&P, generally below consensus. I guess the composite came in at 50.9 versus 52. That was a consensus of 52.1 was for the last period as well. Chris Williamson joins us. He's a chief business economist at S&P Global Market Intelligence. Chris, walk us through kind of what we saw here with the PMIs for the month of April.
Yeah, so there's two surveys really, one of manufacturing, one of services. So the latter is private sector services. So this ranges from consumer-based services to business services. It excludes retail, importantly, and it excludes government. Now, both of those surveys lost some momentum. Collectively, over the first quarter, they'd signaled fairly decent growth, around 2% annualized, with that upturn becoming increasingly broad-based. Services led, but manufacturing also starting to pick up some momentum. But in April, we've seen both of those surveys lose some output growth pace. Still in expansion territory as far as output's concerned, but with growth sort of slipping below the 2% annualized GDP rate. That's the signal from it. So looks like the second quarter could disappoint compared to the first quarter based on these survey data, as your previous interviewee was referring to. These survey data have been a bit softer than recent GDP numbers, so that needs to be borne in mind.
So any sense of what's driving that? Like, I'm not sure how to think about this on a month-to-month basis. Is it just kind of noise month-to-month, and I really want to look at it on a longer trend? Or does the slowdown in April, does that kind of suggest something might be afoot?
Yeah, it does look like there's been some adjustment to demand. So new order inflows, the amount of work flowing into manufacturers and service providers, that fell for the first time in 6 months in April. Only just. It was a small decline, but this contrasts with growth of demand that we've seen over prior periods. And it looks like you're getting some adjustment here to the financial conditions that businesses are facing. So previously we've seen, companies look forward to rate cuts, and that's stimulating demand, those loosening of financial conditions. And over the course of the last few weeks, we've seen further signs that you're not going to get all those rate cuts that you hoped, and indeed markets starting to price in now more possibility of a rate hike. That's feeding through to markets. It's increasing borrowing costs, and it looks like that's feeding through to the business environment. We've seen this creep in before in terms of how those financial conditions really do seem to quickly affect the demand environment, and it looks like that's what we've got here in April. A bit of a sort of reality check. Whether this persists in coming months is going to be the key thing to look out for, but it does look like that certainly going into the second quarter, you're seeing the demand environment soften compared to what we've seen previously.
All right, Chris, thanks so much for joining us. Chris Williamson, Chief Business Economist at S&P Global Markets, joining us from London via Zoom. And again, the S&P Global Manufacturing PMI for the month of April came in at 49.9, Consensus was 52. On the services side, it came in at 50.9, still expansionary, but below the consensus of 52. Both of those were down from last month, which were both close to 52. So again, a deceleration there. So when you put them all together, the services and the manufacturing on a composite basis came in at 50.9 versus 52. So we'll keep an eye on that. A slowdown in the S&P. It's a survey of manufacturing and service activity out there in the economy. Economists kind of take a look at that to see about the outlook for services and for manufacturing. We had a little bit of a rally in the people were buying some treasuries here, up 8.30 seconds on the 10-year, pushing that yield down to 4.57%. The 2-year 4.91%. We were close to 5% earlier in the morning. Coming up, we're going to check in with Lee Klaskow, Bloomberg Intelligence. He's the senior transport analyst. We'll talk about UPS put out some good numbers today. We talk about anything, rails, trucks, shipping, everything with Lee Klaskow. That's coming up.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. The Nasdaq leading the charge this morning, up more than 1%. We have the S&P 500 up 0.9%. The Dow up 0.4%. The two-year yield at 4.92%, down 5 basis points. The yield on the 10-year at 4.57%. That's down 3 basis points. To commodities, spot gold lower at $2,323 an ounce, and over to oil, we have Brent crude at $87 a barrel, NYMEX crude at $82 a barrel. Some more economic data out today. U.S. business activity will expand it in April at the slowest pace this year on a pullback in demand that led to the first decline in employment since 2020. Here we're talking about the S&P Global's flash April gauge of output. At manufacturers, service providers, it slipped the most since August. Sales of new homes in the U.S. will bounce back in March. Strong demand and a small selection of houses in the resale market, well, that outweighed those high mortgage rates. But all eyes today on earnings and this week in general. Moving the markets right now will hit Spotify. They're up 14%. The music streamer reported first quarter results in line with forecasts. Paid subscribers, they rose 14% year over year, and total revenue, that also grew. That is your Bloomberg Business Flash. Paul and Emily.
All right, Lisa Mateo, thank you so much. We appreciate that. Emily Grafeo, sitting in for Alex Deal.
Back in the house.
Awesome. Great to have you here. Emily's going to be with us until 12 noon here today. Alex is on holiday. Hope she's having a good time. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Earnings front, as Lisa Mateo was just saying, busy week here with earnings. One of the big names reporting today is UPS, Big Brown. Profit higher than analyst estimates. Talking about headcount management, restructuring of its delivery routes are beginning to bear some fruit. Let's check in with the expert on all things transport, and that would be one Lee Klaskow. He's their senior transportations logistics analyst at Bloomberg Intelligence. He's safely ensconced down in our Princeton office, and he joins us there via Zoom. So, Lee, it looks like this UPS put up some good numbers. What are really the drivers here?
Yeah, hey, Paul. Thanks for having me on. Yeah, I think it's really about what they're doing on the cost side. I think that's really the driver of the outperformance in EPS, because revenue did come in slightly lower than expectations on lower volumes. They're dealing with lower volumes from lost share last year when they were negotiating their labor contract, and a lot of shippers kind of try to find other alternatives in case there was an issue with their network from a strike, but obviously that didn't happen. Now they're being pretty busy trying to win back that share. So net, I think what they're all in all, it was a good quarter. I think if UPS is, meeting or beating expectations, that's a good thing, because they've had a rough year, driven a lot by that labor negotiation, which increased costs considerably and resulted in a lost amount of volume, which, for a company like UPS, the deleveraging effect on margins is quite substantial. But there were definitely some good news in the report today that, we remain optimistic that they might be even looking to possibly increase, their full year guidance for 2024, especially as the U.S. Postal Service contract, which they recently won from FedEx, starts hitting their P&L.
When you talk about average daily package volume down year over year, revenue down year over year, how much of the softer demand for UPS is related to macroeconomic factors and maybe coming out of the pandemic, consumers shipping less? Is that a factor here?
Yeah, I think it's probably a trifecta of things. It's probably a softer freight outlook altogether. That coupled with tougher comparisons and the fact that they are still trying to win back the share that they lost from their labor contract negotiations. So I think those three things are kind of weighing on their volumes probably more than maybe their competitors like a FedEx or a DHL.
Haley, I know labor is a big deal with UPS and these companies here. I know UPS, they had a new labor contract that really pushed up wages and benefits starting, I guess, this year. But then on the other side, they also cut 1,200 or 12,000 white-collar jobs. That's like 14% of the workforce here. So talk to us about the labor and the component there and the cost structure.
Yeah, I mean, net, they're doing the right things. The contract might have a with the Teamsters might have had a negative impact to margins, but we are going to anniversary those in the second half of the year, so those comparisons won't be as bad. And also, it does provide them with a steady labor force. Because, if your labor is happy, you're going to have less turnover. You have less turnover, you probably have better service and better safety, and that usually yields better profits. So I think if you look longer term, beyond the initial shock of that new contract, which is very front loaded, the increases aren't as bad as we get to year two. It's not going to be as bad. And listen, UPS and FedEx and a lot of these companies, they did get a little on the fat side, if you will, on their corporate ranks. And I think they're both doing the right things in terms of trimming it for the new normal of what their operating environment is today.
How should investors be thinking about UPS? The stock is up 1.5% right now, but it's down about 6% year to date, underperforming the broader market.
Yeah, and if you even look even further over the last 12 months, it's down almost 25%, underperforming not only the broader market, but, its closest peer, FedEx, which is up around 18% over the last 12 months. So, I think what they need to do is they need to execute. They don't only need to execute on their 2024 plans, but their 2026 plans. And I do, as I said earlier, I think there is some opportunity for some upside surprise given their U.S. Postal Service contract. It didn't really make that much money for FedEx, but I think UPS's network is very different than FedEx's. It's more integrated. It's not a hub and spoke network, and that will provide them with some profitability. And management is pretty confident, or at least appears confident, that this business is going to be not only accretive to earnings, but accretive to margins. And that's kind of what we, as we look at the company, really want to see. We really want to see those domestic margins start to improve.
Hey, Lee, what are the companies saying about kind of normalized growth rates in terms of, I guess, unit volume? Where's this U.S. economy in terms of just packages? Is it a GDP kind of number? Is that kind of the story?
Yeah, it's a GDP kind of number, but UPS wants to grow beyond GDP, and how they're going to do that is they've made some pretty significant, not in size necessarily, but in terms of capabilities, acquisitions. They bought a company, Roadie, which it's not a drink on the road, Paul, but it is. What they do is they deliver heavy stuff to people's doors. So think furniture, think workout equipment, fitness equipment, and that is done through more or less an asset-light model where they're arranging the delivery. So that's a very good business. They're also invested or acquired a company that does returns without having to box it. So it's a lot easier for consumers to either go to a UPS store or one of the other drop points that UPS provides to return something, and that's good for UPS because that stuff goes into their system and it becomes a B2B delivery, where when we say B2B, business, and meaning that there's more density. So they're shipping, they're consolidating and shipping 20 boxes versus just one envelope, and that tends to be more profitable. And then their investments in the healthcare space, their goal is to be the largest healthcare logistics provider. Healthcare has above average margins for transportation companies, given the high level of service that's involved there. Think temperature control, think, the fact that it has to get somewhere at a very specific time. So, those are higher margin business. So, I think that those growth areas I just mentioned will help them grow their overall volumes beyond, just GDP numbers.
All right, just real quickly, Lee, I'm looking at the stock. Oh my God, over the last 5 years, UPS and FedEx both grew at a compounded annual rate of 8.8%, spot on, below the S&P 500 of 13%. But why do investors own these stocks? What's the call to own a FedEx or a UPS?
Well, Paul, as you know, we don't do recommendations here at BI, but it's a play on e-commerce. It's a play on the global economy. And it's more and more becoming a play on nearshoring. The UPSs and the FedExes and the DHLs of the world, even the freight forwarders like Akuna and Nagel, they're all going to benefit from the changes in supply chains. As supply chains, change and shift and get more complicated, these companies really prove their worth during these times. And I think that if you believe in nearshoring, if you believe in the fact that we're going to be buying more online, not less, these are places where you want to be. And it's really about the management teams that are in place, whether it's UPS or FedEx. Can they change their organizations to the new normal? And it looks like they're both doing it. It's not going to be an overnight change. It's going to take time because these are very, huge networks, and they're not as easy to change as it would, changing a menu at a restaurant.
Right. All right. Hey, Lee, thanks as always for joining us. Lee Klaskow, Senior Transportation Analyst of Bloomberg Intelligence, joining us from the Princeton offices of Bloomberg here. Looking at the markets here, S&P 500 up 1%, the Nasdaq's up about 1.5%. So we are rallying on back of those weaker than expected PMIs, maybe giving a little bit more fuel to the folks that say, hey, maybe this Fed can cut rates maybe a little bit sooner than we thought here in 2024. The yields, two-year Treasury, 4.92%. We were at 4.99% just earlier this morning. With our news in New York City, here is Michael Barr.
Thank you very kindly. Donald Trump is back in the Manhattan courtroom in his hush money trial. Before testimony, a hearing is taking place right now on whether Trump violated a gag order. Later today, the National Enquirer's former publisher is expected to return to the stand. David Pecker was the first and only witness yesterday following opening statements. Prosecutors say Pecker worked with Trump and Trump's then lawyer, Michael Cohen, on a catch-and-kill strategy to buy up and then spike negative stories during the 2016 campaign. Testimony resumes today. Before he entered the courtroom, Trump slammed President Biden for the protests taking place at college campuses across the nation about the Israel-Hamas war in Gaza.
What's going on at the college level and the colleges, Columbia, NYU, and others, is a disgrace, and it's really on Biden. He has the wrong signal, he's got the wrong tone, he's got the wrong words, he doesn't know who he's backing, and it's a mess.
As Passover begins, concerns about anti-Semitism on college campuses grows. Columbia University has decided to go to hybrid learning with the option of virtual classes for the rest of the semester. Last night, a large protest was held at NYU when police were called in to help break up the protest campus buildings.
Unity is power. I mean, we're all here in unity to support Gaza, Palestine.
President Biden is campaigning in Tampa today to talk about abortion access. His visit comes 1 week before the state of Florida is set to ban abortion after 6 weeks before most women even know that they are pregnant. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level. My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
being bands. I played drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
As the U.S. economy goes, and as we know, if anything, the U.S. economy's been running a bit hot.
Hey, Craig, just for GM and Ford and Stellantis and the other, do you think investors want them to step up EV production commitment, investment, or dial it back?
I mean, I think they've kind of applauded the dialing back of the last few months, and it is kind of remarkable because 2-3 years ago, the market wanted something very different, right? I was just working on a story with colleagues of ours in equities about the fact that 2.5 years ago, Tesla had a $939 billion market cap lead over Toyota, the next most valuable car company. Around that time, if you didn't have a credible EV plan, your stock was really getting punished. And so, Mary Barra was leaning into GM's EV plans really quite a bit. And I think the fact that, the U.S. consumer has balked, I would say over the last 6 months or so, has really led to sort of a rethink on the part of GM and Ford as to, okay, well, just how many plants do we need? Can we, delay some of these product programs and get a better handle on just how ready the consumer is in the U.S.
Well, let's talk about Tesla, because the whole market is waiting for their earnings report later today. For people who don't follow the company that closely, but know that the stock is down 40% year to date, I'm wondering what is the most important metric to be looking out for in this earnings report? What is really essential for investors to be watching for?
I mean, the metric that generally I would say has been paid close attention to has been automotive gross margins, excluding tax credits. Tesla generates quite a bit of revenue from selling regulatory credits to other car companies that aren't, meeting their obligations in terms of the CO2 of their fleet. When you back that out and look at their gross margins, that's been something that the street has paid very close attention to for years. That has been trending in the wrong direction, but really everything has. I mean, I think the expectation this quarter is that revenue will be down for the first time in 4 years, which is not a surprise because vehicle deliveries were down year over year. But the fact that deliveries were down was a big shock. I think everybody was looking for a soft quarter, but they were really caught off guard by just how rough the first quarter was for this company. And, there's been a lot of attention around narrative and noise of, are they doing a cheap car or aren't they? Are they doing a robo-taxi? And if they are trying to, can they? But the fundamentals of this company also are not moving in the right direction. And that's absolutely contributing to the stock moving the way it is.
Yeah. So, Craig, I guess if you talk to some of the folks out there that are a little bit more skeptical, they're saying, hey, the bottom line is demand for EVs across the industry is slowing dramatically. That's the bottom line. And maybe the Elon Musk and company, they're trying to redirect some of the attention by focusing on robo-taxis, by focusing on AI. What do you think Elon Musk has to do on the call today? Because, boy, if I'm going to dial in from the beach at 5:30 p.m., everybody's listening.
Yeah, it really is a very highly anticipated call, just in the sense that, it feels very 2018 like, when, Musk's back was up against the wall when they were having trouble with the Model 3. And, everybody was really wanting answers from him, and he was kind of acting out. I mean, I'm sort of bracing for that and hoping that we don't get that we don't get the Musk calls the analysts boring and boneheaded, but let's see.
All right. So, I mean, again, the bottom line here is, I mean, is there a sense that EV demand in general has peaked, has waned, is hitting a speed bump? Where are we here in terms of the narrative, do you think?
I would go with that last one. I mean, I do think that, in the long term, are EVs the way that the industry is going? Absolutely. Are we having some real challenges, particularly, I would say, in the U.S.? I think everybody thought that, charging infrastructure was going to make some real progress because of the Biden administration's efforts, the IRA, and yet, all of the efforts to get the EV market moving in the U.S. have really struggled. And so, if the consumer's sort of not going along, then we really need to have a rethink. And, I think with Tesla, the fact that they've not had enough, new product activity, the extent of their new models is a very expensive pickup truck, that by the way, was just recalled. And is really polarizing. That is not helping matters.
All right, Craig, great stuff. Thank you very much for joining us. Craig Trudell, Global Autos Editor for Bloomberg News, joining us from our London headquarters via Zoom. Talking about GM, good numbers, beat on the quarter, taking guidance up. Americans love their trucks. We know that, and they sold a lot of trucks in the last quarter, so that's good news for them. The stock's up 5% today. Tesla, of course, kind of one of the big stories for this U.S. stock market here. They're going to report after the close. Conference call, 5:30 p.m. Wall Street time. What can Elon Musk say to appease some of these concerned shareholders? This is Bloomberg.
company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. iPhone sales in China fell 19% in the first quarter, while rival Huawei sales jumped nearly 70% in that same period. That's according to Counterpoint Research. Bloomberg Intelligence tech analyst Mandeep Singh.
Huawei coming up with a phone that's comparable to an iPhone in such a short time just puts into focus how much of stickiness Apple has in the region. But in the end, Apple's revenue growth is driven by iPhone and market share gains, and that's not going to happen given China is a 20% region and they're losing market share over there.
Now, in other news, Apple announced plans for a special event May 7th when it is expected to unveil new iPads and accessories. Apple shares up 0.3%. A big week for earnings. Let's start with UPS. Shares are higher. They're up more than 1% after reporting strong profits thanks to its headcount management and also restructuring of its delivery routes. Then we have PepsiCo, posted better than expected sales growth with strong demand in international divisions. But here's the thing, volumes dropped across North America. That's why shares are down more than 2%. JetBlue Airways, it says revenue this quarter will fall more than analysts expected as excess flying capacity holds down its fares in Latin America. George Ferguson covers the airlines for Bloomberg Intelligence.
They have more of a mix of Caribbean, which we know there's a bunch of weakness. There's a lot of capacity going into Caribbean and Latin America. And so it looks to us like this is more of a story of that basic part of the cabin is a much more difficult place for airlines to get any decent price out of.
And JetBlue down nearly 17%. General Electric, they're higher. They're up 6%. The company raised its full-year profit guidance for its aerospace business. And General Motors expects better profit this year. Those shares are up 4%. That is your company news at this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, quick data check here. The S&P 500 up 1% here. The NASDAQ up 1.4%. How about that Russell 2000? The small cappers leading the way up 1.7%. Yields come in slightly. The 10-year Treasury 4.58%. WTI crude oil up about 0.5%, $82.30. Bitcoin, it's up just slightly, just below $67,000 per token. That's for Tom Keene. Right now, with our news in New York City, here's Michael Barr.
Thank you, Kylie, Paul, Emily, and Lisa. Former President Trump is back in court today for his hush money trial in New York. Before testimony, the prosecution is pushing to hold Trump in contempt for violating a limited gag order that bars him from attacking witnesses and jurors. Prosecutors say they have 10 social media posts from Trump where he attacked Stormy Daniels and his former fixer, Michael Cohen. Israel may face some U.S. sanctions for the conduct of an army unit made up of ultra-Orthodox Jews battling frequently with Palestinians. That word from Secretary of State Antony Blinken as Israel continues to prepare an all-out assault on the city of Rafah in Gaza.
Do we have a double standard? The answer is no.
Secretary Blinken said they are investigating allegations of human rights abuses by Israel in Gaza. It's the Senate's turn on foreign aid. Bloomberg's Amy Morris has a preview from our 99.1 newsroom in Washington.
Senators had planned to spend this week taking part in congressional delegations around the world or meeting with constituents back in their home states. Instead, they're back on Capitol Hill for the first votes on a $95 billion foreign aid package. They'll start with a key test vote, cloture, to limit debate before a final vote to pass the bill. Now, this bill includes nearly $61 billion in aid for Ukraine, more than $26 billion for Israel, and more than $8 billion for the Indo-Pacific. It also includes measures to seize Russian assets, require TikTok's Chinese owner to divest the app, and impose sanctions on Iran. The first votes are set to take place this afternoon. In Washington, Amy Morris, Bloomberg Radio.
And finally, breaking news, Wall Street Journal reporter Evan Gershkovich will remain jailed on espionage charges until at least late June, after a Moscow court today rejected his appeal that sought to end his pretrial detention. The 32-year-old U.S. citizen was detained in late March of 2023 while on a reporting trip and has spent over a year behind bars. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Emily, and now John.
All right, Michael Barr, thank you so much. We appreciate that. Lisa Mateo leaves, John Tucker comes in. I don't think I like that trade. I just don't like it.
Well, pardon me.
Yeah, exactly.
Would you like me to leave?
Exactly.
I'm leaving right now. I see.
All right, get it home safe.
I have that effect on people.
Exactly. Emily, are you a Spotify user?
I am. I'm a loyal Spotify user.
So you have your playlist and all that kind of stuff?
Yeah.
How often do you adjust the playlist? Add something, take something out, or you just let it roll?
Very frequently. I'm
Very
always
always
updating my
updating.
playlists. You can download music. Spotify has really good, in my opinion, technology for recommending new music. Their algorithm, based off of what you've listened to in prior listening
What
sessions.
qualifies as new music these days? I mean, I'm still listening to Creedence Clearwater Revival, so...
Exactly.
Well, it's not always new music that came out, but it's music that you haven't listened to before because
Okay.
Spotify collects all that data. So they'll recommend.
Okay. Did I tell you I met Ed Sheeran last week?
No, that's pretty cool.
That's pretty good. Same day I met Alex Rodriguez. It was a big day. Yeah. Anyway, Spotify shares surging the most in almost 2 years after the audio streaming giant reported had swung to a profit in the first quarter as a company boosted subscribers and added new features. Paid subscribers rose 14% year over year to 239 million. So that's it's better than expected. So putting up some good numbers here. Total active users, including those on free plans with advertising, grew to 615 million. Slightly less than the 618 million forecast by analysts. But again, a pretty good quarter for
Strong
Spotify.
pricing power.
Strong
They
price.
raised prices last year, and
what happens? You just pay it, right?
you just pay it. It's a subscription. You don't even notice.
Is it the Netflix for music, right? It's kind of the Netflix for music.
Yeah.
It's kind of you have
But
to
less
have it.
competition.
Less competition, right? But they have to compete against Apple, and they compete very well against Apple. It's kind of amazing. Stock surging the most in almost 2 years for our friends at Spotify. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, more earnings on the airline front. JetBlue reported some numbers. Stock trading down here on some weaker than expected numbers forecast. George Ferguson, he covers all the airlines and aerospace companies for us. He's going to join us to break that down. Mandeep Singh, Bloomberg Intelligence senior tech analyst, joins the program to discuss Apple's iPhone sales in China. We got a big issue there. I'm not sure how Apple gets around this issue in terms of overall demand for their products in China. Well, we'll check it out with Mandeep Singh. But first, let's start it off with Mr. John Tucker in a Bloomberg Business Flash. Welcome, John.
All right, Paul and Emily, that's some welcome. Stocks are pushing higher today after yesterday's gains. Of course, Tesla kicking off the Mag 7 reporting after the close of regular trading. Every member of the Mag 7 cohort of mega caps rising today. We have 180 companies reporting this week. That represents about 40% of the S&P 500's market value. Among other movers, you just mentioned Apple. Those shares up close to 0.5%, despite the fact that iPhone sales in China fell 19%, at least according to an independent research firm. United Parcel Service reporting profit higher than analyst estimates, and those shares right now over 2% higher. And PepsiCo posting stronger than expected sales growth as well. Those shares, after that, down 2.1%. Wasima Shah's chief global strategist at Principal Global Investors, and this is how she sizes up the market for you.
We do need the earnings story to be fairly positive in order to reinforce a bit of the market rally. Now, the economic data, I mean, the economic backdrop is really strong. That seems to be very clear. So earnings should be fairly solid, but of course, expectations are fairly lofty for some segments of the market. So there is potential for disappointment.
Some economic activity, business activity expanding in April at the slowest pace this year. You had a pullback in demand. This is the S&P Global Flash April Composite Index of output slipping 1.2 points. S&P 500 up 47, up just about 1%. At 5,058, the Dow Jones Industrial Average up 202 points. The NASDAQ 100 right now, 203 points higher. That is up 1.2%. Let me do yields real quick. The 2-year, 3 basis points lower. We have auctions of treasuries, 493 on the 2. The 10 down 2 basis points. That's at 458. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you can find us. Lots of earnings coming this week. JetBlue reported some numbers that missed estimates. I guess the revenue forecast also missed estimates. The stock tumbles the most since 2020. Calling out Latin America a little bit, but let's check in with George Ferguson. He covers all the airlines. He covers all the aerospace companies for Bloomberg Intelligence. George, I don't fly JetBlue. I'm a Newark kind of captive, so I fly United. Every flight I'm on is packed. What's going on at JetBlue?
Yeah, so JetBlue is, they have a significant challenge with the Caribbean excess capacity, and so that's an important part of their market. 35% of their routes. There's been a lot of leisure capacity into Latin America. A lot of the low-cost carriers, Spirit, Frontier, fly down there. You can get there with a narrow-body airplane, so it's pretty easy. I mean, that's why JetBlue can get there too. And some of the bigger airlines, United American, Delta, have probably added some capacity into Latin America as well as they pursue more of a leisure traveler. All part of this that we're waiting for business travel to come back. It hasn't fully come back. So most of the airlines in the marketplace have shifted routes to where they can capture most of the leisure travelers, and that's just adding a lot of excess capacity to Latin America and crushing revenue.
Yeah, can you talk a little bit more about how this compares to larger rivals, Delta and United, because they also reported weaker sales in Latin America?
Yeah, I mean, everybody's generally talking about difficulties to Latin America, too much capacity. The advantage is that, as the carriers have already reported, like United, like Delta, they just have much larger networks. Caribbean's a lot less of that network. And they've got a lot of premium seating, more premium seating than JetBlue, and they can use that, increased revenue they generate from premium seating to help offset the weaknesses they're seeing to places like Latin America. So I think that's the big difference.
All right, George, thanks so much for hopping on with us. Appreciate it. George Ferguson covers the airlines, covers the aerospace companies for Bloomberg Intelligence. Talking about JetBlue, the stock is down 17% today. Still up 12% year to date, but a big miss today on their results and on their guidance. And as George was just mentioning, calling out Latin America as one of the weaker spots for them, and stocks taking on the chin here. Looking at the markets, a good day in the markets. S&P up about just under 1%. Yes, the NASDAQ up 1.3%. Let's see where the action is under the hood with some specific companies. We do that with Nora Melinda. She covers all the markets for Bloomberg News. She joins us here in our New York City studio. Nora, what are you looking at?
Well, Paul, I'm watching General Electric. Now, those shares are up more than 6.5% in trading this morning, touching $160 earlier. Nice. Now, that's the highest since 2008.
Wow.
Huge jump here. It's one of the 5 biggest gainers in the S&P 500. Now, this is coming after the company raised its full-year profit guidance for its aerospace business. Now, this is all coming after it was boosted by an increase in revenue from its commercial aircraft engines. And, of course, this is the first report that we've seen from GE since it did have that spinoff of GE Vernova just back earlier this month. That was the energy business that we've been talking about for weeks. But really great results here.
I mean, not kidding, a generation of investors who've been waiting for GE to work. I mean, it has been forever. They've been downsizing this company since the great financial crisis.
And now it's happened.
And now it's finally starting to turn around. Aerospace, power being their 2 big businesses there. So that's good news for our friends at GE. What else you got?
Looking at Spotify, I mean, we've been talking about this all morning. Emily, before you joined us, I wanted to know, do you use Apple Music or Spotify?
I'm a Spotify
Okay,
girl.
So I wonder if is it a generational thing?
I have some peers who use Apple Music.
Okay. Why? What do you use?
I use Spotify. I use Spotify because of the Hulu
John
bundle.
does AM/FM. He's fine with that.
And Spotify
What's wrong
had
with
a
that?
student
It's free.
discount.
Yes.
So when I was a student, I would use that, and then I just kind of got grandfathered into using it.
Whatever happened to, was it Pandora? I want to say.
Yes, well, that's what Lisa Mateo said. And so it's just like, oh, you must leave now.
Well, we kicked her out. Spotify is on a roll this morning. Those shares are jumping to almost $315 earlier this morning. That's notching a 3-year high. Wow. And this is after it swung to profit in the first quarter. And it's really citing a boost in subscribers and added new features. And as we were talking earlier, it's crazy that it can really rival Apple. So, I mean, these are some really great results coming out of Spotify here. And it's really showing that it is a behemoth. It can actually compete with the likes of Apple.
Home builders?
Yes,
Let's
home
go
builders.
there. Your beat.
My plot of land.
Yep.
We did see those new home sales data come out this morning. And so we are seeing shares popping for home builders here this morning, just marginally, but we had U.S. home sales data jump to its highest level since September. And of course, I'm constantly watching this, especially as we're in spring selling season, which is the best season when it comes to new home builders. And it's just really interesting here. I mean, it's not the largest jump, but it's great to see a pick back up when it comes to new home sales.
Very good. What else?
Lastly, Tesla.
Tesla, okay.
We can't stop talking about Tesla.
That's it. That's the news of the day.
I mean, that is the news of the day. That's the news that everyone's paying attention to. But, I mean, as we spoke about, I think analysts are really seeing that this company is sitting here on thin ice. So I think it's going to be a really critical moment, as I'm hearing from a lot of the sources I've been speaking to, that this is really going to be a game changer, what comes out of these results this afternoon.
I'm gonna listen in.
Up 2% right now.
Up 2% here, down 42% year to date. Norma Linda, thank you so much for joining us. Norma Linda follows all of the equity markets for Bloomberg News, getting a little bit of a look there. Again, Tesla after the close, conference call 5:30 Wall Street time. It's going to be really critical for Elon Musk to lay out some vision here, I think, for how they turn things around.
Yeah, exactly. Maybe some distractions too. Talk about robo-taxis, flying cars, instead of actually the declining revenue.
Yeah, I don't know. I'm not buying it. I mean, I just think they can talk about robo-taxis all they want, but they got to get this market comfortable with where the overall EV demand is. Where are we on that demand curve? So we'll see. Let's switch gears to Apple. They're going to be reporting, I think, back in early May, the 2nd or 3rd. But again, the big issue for Apple is basically the iPhone and China. And where is the demand there in China? Because Bloomberg News has got a story out today. Apple China iPhone sales dive 19% in the worst quarter since 2020. And this is a big issue because we know that China represents approximately 20% of the sales for Apple. It's obviously critical to their supply chain. So if there's one company that, at least to my mind, that has quote-unquote China risk associated with it, it's Apple. Mandeep Singh joins us here. He's a senior technology analyst for Bloomberg Intelligence. He joins us here in our New York City studio. So Mandeep, Apple China iPhone sales dive 19% in the first quarter, the worst since 2020. What's your takeaway there?
I mean, it's not new news.
Okay.
So we knew this was coming. There was some counterpoint data, I think, last month that their March sales were pretty bad. So expected, but it kind of solidifies the point that, the China weakness is playing out much worse than what people expected. And the China revenue probably is going to be like this for the foreseeable future unless something changes at the geopolitical level or Apple launches a new device that everyone wants, that latest iPhone that everyone would want. But for now, Huawei and the domestic competitors seem to be catching up in terms of features, and that's enough to take the share in the domestic market.
So this is a story then of consumers shifting to competitors, or is it just that demand for phones is down because there's some macro weakness in the Chinese consumer?
I think there is a policy element to it as well. So obviously a lot is kind of driven by what is done at the government level. First, they banned, the use of iPhones, and now they're making sure that the domestic vendors have a good chance of taking share. And because the phone is comparable in features, then I guess the Apple lock-in that everyone thought was so strong that you just can't get out of your iOS isn't really helping, or like in this case. And they are able to kind of move out of the iOS ecosystem and start using this new phone.
What's Apple say about their position in China, what they may need to do to regain momentum? Do they have any strategy they've articulated?
I mean, look, they are having an event on May 7th where they are launching a new iPad lineup. There will be something very similar for the iPhone. They will launch a new device with AI capabilities. So their play is we will launch a new phone, a new tablet with AI capabilities that everyone is looking for. And hopefully that drives the refresh cycle.
And how does the slumping demand in China compare to the U.S. demand? Because I have to admit, a lot of people feel very peer pressure to stay with an iPhone versus a different device simply because if you're in a group chat and you have blue text messages, like it seems like that's actually a really strong feature that can ramp up demand, at least in the U.S. So how does that compare and how are you looking at that?
I will say I think Apple is still gaining share in other markets, U.S., India, other pockets as well outside of China. But that China revenue is almost 20% of their sales. And if it's going to be zero a couple of years from now, then you have to ask yourself what makes for that revenue shortfall. And for a variety of reasons, as we talked about, related to China. But even if they're doing well in other regions, it's just pressure in terms of unit sales. And what do? Do you keep raising the prices of the phone, which they may have to because they have to relocate the supply chains out of China? That's the other aspect of it, the cost pressures when it comes to making this phone. They will have a lot of that because they have to relocate those supply chains, and it's not easy.
I'm surprised they haven't taken a more aggressive approach in India, like maybe a lower cost model to appeal to that marketplace. What's their India strategy?
I mean, so far, I think they are catering to that premium segment, and they have had success, in terms of that 1% or 2% penetration that they have had, in terms of the region. But a low-cost phone, it's hard in India simply because how low can you go? And Apple has tried that with different SKUs in the past. They haven't had a ton of success with low-cost phones because, again, the competitors are quite fierce when it comes to, the feature set and the quality of the phones that they offer. And so it will be an interesting strategy if they decide to pursue that. But for now, I don't think anything can make up for that China revenue shortfall because it's declining at a very rapid pace.
So their earnings aren't until May 2nd. They have that launch event on May 7th, but we do have some other big tech earnings coming this week. Can you talk about that?
Yeah, I mean, look, Meta, I think it's a company that has had a great turnaround story, and we know turnarounds are tough in tech, but Meta has shown that, it's a remarkable story when it comes to laying off 25% people and then growing revenue 25% in subsequent quarters. I mean, it just speaks for how well they have executed. And now they are at the top of the game when it comes to having their own large language model. So that could make a difference in terms of, the new revenue stream that everyone wants to see with Meta, and probably the metaverse may become a sideshow. I think another company that I feel is not very well understood and probably everyone thinks they're going to get disrupted is Google Alphabet. And that's where it would be interesting to see what they do around search, because all the survey work that we have done, it shows that the new companies, ChatGPT, Perplexity, they have taken some share when it comes to the search queries. Now, still the counter argument is everyone still needs to go to Google Maps or Google Search to look at what ChatGPT is generating because they're not sourcing the links. So in the end, Google is still getting the traffic, but obviously the search is starting somewhere else, and that's the key risk that they have to address.
All right, so does Google have an AI play per se?
Yeah, so their Gemini large language model, I mean, we all know it wasn't a success initially, but now they have caught up in terms of features. And look, Google doesn't want to integrate Gemini everywhere because that's going to hurt their ad revenue. So they're very careful with how they roll out and how they make those UI changes because it's going to be disruptive to their incumbent position when it comes to the digital ads market.
Do you use Gemini?
I do, and I think for certain tasks like generating summaries and video editing, that kind of stuff, image editing, it's great. but I don't use it for my search yet because when it comes to the traditional Google search, it's still the go-to place when I think about, certain things to do, and that's the behavior I have.
All right, you're our guy. Mandeep Singh, Senior Tech Analyst. When you start using something, I'll start using it. And when Anurag tells me to upgrade my phone, I'll upgrade my phone. That's how I roll. Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Brokers studio. iPhone, China, Apple, it's a big challenge for them. As Mandeep said, almost 20% of the revenue comes out of China. They need to figure that out. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So stocks are pushing higher right now after yesterday's gains. In the S&P 500, 9 of the 11 major industry groups are up, being led by communication services and information technology. NVIDIA leading the chip stocks higher, and Super Microcomputer, the best individual performing stock in the S&P 500, up close to 9%. Though you have to keep in mind the server maker is still down 15% from Thursday's closing price. Tesla, of course, leading off the Mag 7 stocks, reporting after the close of regular trading today. Ahead of that, Tesla shares right now, they are up 2%. And after tumbling about 19% over the past 7 days. Data today showing U.S. business activity expanding at the slowest pace in 4 months. The 2-year yield, 3 basis points lower, that's at 4.93. The 10-year, 1 basis point lower, that's at 4.59. And Apple announcing plans for a special event May 7th. The expectation is going to unveil iPads and accessories after a pretty long lull for Apple. Those shares today up about 0.6%. Overall, the S&P 500 56 points higher. That's up 1.1%. The Dow Jones Industrial Average up 225 points. That's a rise of 0.6%. Nasdaq 100 251 points higher, up 1.5%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate that. Emily Grafeo, Paul Sweeney. We're live here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Emily Grafeo, a proud graduate of the University of Richmond. University of Virginia, sorry. Slip of the tongue. As is our next guest, Garrett Nelson, Vice President and Senior Equity Analyst at CFRA Research. Garrett, my notes here say you're in Richmond, Virginia. How'd you work that scam?
That's right. Only an hour from Charlottesville. So, as a proud Who, very happy living so close to the alma mater.
All right, very good. I'm surrounded by UVA folks. Hey, Garrett, Elon Musk. Let's talk Tesla. You're the auto dude at CFRA. What does he have to do on the conference call today? It seems like he's got to pull a rabbit out of some kind of hat here to reverse the bad mojo around the stock.
Yeah, look, there's no question the stakes are extremely high heading into this earnings release. The stock is down more than 40% year to date, coming off a year in which shares more than doubled. Tesla's earnings execution also hasn't been great. They've missed on the bottom line each of the last 2 quarters. But we think the challenges they face at this point are well understood by investors. They're having issues with the ramp up of production of the Cybertruck. The EV market overall is oversaturated, and growth rates have slowed tremendously. And, there's some uncertainty regarding the future product pipeline, when they might bring to market the mass market EV or robo-taxi. That's not really clear right now. So certainly a lot to look for. There's always a lot on the line. Tesla is one of the most anticipated earnings releases every quarter, but even more so this quarter.
Yeah, can you talk a little bit about Tesla's efforts to cut prices on their vehicles and how that is going to play into the earnings? I see a lot of headlines about cutting costs. They recently slashed prices, I think 2 weeks ago, on most of their models. Is that something that investors should be watching for even more today in the earnings?
Yeah, so Tesla's been cutting prices steadily for over a year now. Remember, just after the new year in 2023, they announced a series of price cuts, and there have been several price cut announcements since then. So it's going to impact both the top line and the bottom line. You're really going to see it in the gross margins that they report. So, but also Tesla's at a point where they opened 2 new factories just a couple years ago in Austin and in Berlin, and they're still in the process of ramping those plants up to full capacity. So, if they can do that, cut prices and drive sales higher, they can drive down their unit costs by doing so. Auto manufacturing is a very high fixed cost business. So ultimately, they want to run those plants at the highest possible capacity utilization rate without surrendering too much margin.
So, Garrett, I guess to me, thank you, blue button. To me, Garrett, I think probably the most fundamental issue here, and I'm not sure Elon Musk can really address it, is what is the overall fundamental long-term demand for EVs? There's a lot of folks out there that are saying it's not great. It's not what maybe the industry once thought. What's your view on that?
Yeah, I think that's a big reason behind the sell-off in Tesla and other EV manufacturers. I mean, look at the stock price of Rivian, Lucid, Fisker, is that the growth rates have disappointed, compared to what investors thought growth would look like just 2 or 3 years ago. So, it's been a disappointment. And one thing you can point to is that governments around the world are putting EV mandates in place. And so, that we think that's a big positive for Tesla. Obviously, as an EV pure play, you're also seeing a number of traditional auto manufacturers really pull back on their planned EV investments. So over the longer term, there should be a lot less competition in the EV market for Tesla, which really opens up the market opportunity.
What else makes Tesla different than other pure play EV manufacturers? If you read the Walter Isaacson biography of Elon Musk's, you kind of get a sense that Musk never wanted Tesla to just be an EV company, but thinks of it more as an AI company, a battery company. How much does that matter to investors right now when the stock is down, 40% year to date?
We argue it should matter. I mean, look, they have an energy business, energy storage, that if you look last year, it's been growing faster than the auto business. They hardly get any credit for that business. And so, we think it should matter. But really the big distinguishing factor when you look at Tesla relative to other competitors is its balance sheet. This isn't the Tesla of 3 or 4 years ago that was just barely getting by. Tesla today has an investment grade balance sheet. They're sitting on over $29 billion of cash. They have some of the highest gross margins in the industry. And we think they have an attractive development pipeline. So, that's really, you've seen a bifurcation in the market where, some of the smaller, newer EV players, like the ones I mentioned, some of them have either declared bankruptcy or are flirting with bankruptcy. So, Tesla is really in a much different position than those companies. And in fact, a lot of traditional auto manufacturers don't even have investment grade balance sheets. So, they're in a better position than those companies, in our opinion.
Garrett, do you have the confidence that Tesla can profitably make an EV at a $30,000, $35,000 price point?
Going to be difficult. So, when Elon Musk first started talking about this mass market EV years ago, it was a $25,000 EV, and that just isn't, with inflation that we've experienced since then, and the economy continues to experience. We think, if this happens, it's more likely to have a price point somewhere north of 30,000, maybe 30 or 35,000. And that's really a price point that they're going to need to produce it profitably in this environment.
I have 2 questions. One quick question.
Go.
We talked about the balance sheet. Does Tesla still have Bitcoin on their balance sheet? Remember when that news came out like 2 years ago?
Yeah.
They do, and
Interesting.
That was a drag on Tesla for a while when Bitcoin was falling. With Bitcoin having rebounded, they've divested some of the Bitcoin, but they do have some amount on the balance sheet. I would have to check the 10K for the exact amount, but they do still have some Bitcoin.
The other question I had was just when the earnings come out, what are you looking for? Best case scenario, what kind of headline would you have to see to, start buying more Tesla after the earnings?
Really, the biggest thing is we're looking for some certainty regarding the Cybertruck. From as far as we can tell, from the time they made first deliveries of that vehicle in November, through the end of March, they've only produced maybe a few thousand units of the Cybertruck. Now, the reservation count for that model is somewhere north of 2 million. So you have 2 million customers out there who are awaiting delivery of their Cybertruck. They're having difficulty ramping up production. There was a recall just announced. And so, we're looking for some certainty regarding when they might hit certain production milestones for the Cybertruck, which is going to have an impact on their full year deliveries, obviously, and then looking ahead into 2025. But, if you look across the street, earnings estimates have come down massively for 2024. And so we think they're at a level which are much more achievable here. And so the story becomes more of a 2025 and beyond story, which is what investors are looking for, taking a longer term view, but also they want to see better execution in the near term.
All right, Garrett, thanks so much for joining us. Really appreciate it. Garrett Nelson, Vice President, Senior Equity Analyst, CFRA Research, a proud Wahoo from the University of Virginia, somehow working his scam from Richmond, Virginia, one of my favorite towns anywhere. My twins were born there. Great city, great place to live. So Garrett's got it figured out there, doing the Wall Street thing from Richmond, Virginia. Good for him. Tesla, after the close, that's going to be big. With our news in New York City, here is Michael Barr.
Thank you very much, Paul, Emily, and John. Former President Trump is back in court today for his hush money trial in New York. Before court got underway, the president told reporters that he's upset his supporters aren't able to congregate near the courthouse.
For great Americans, people that want to come down and they want to protest at the court and they want to protest peacefully, we have more police presence here than anyone's ever seen. For blocks, you can't get near this courthouse.
However, the park across the street from the courthouse, where protesters are allowed, has basically been sitting empty since proceedings began. Meanwhile, the judge ended a hearing on prosecutors' requests to hold Donald Trump in contempt of court and fine him for social media posts that they say violated his gag order. Prosecutors in the hush money case cited 10 posts on Trump's social media account and campaign website that they say breached the order, which bars him from making public statements about witnesses in the case. The city of Baltimore officially filed a lawsuit against the owners and managers of the Dolly container ship. The suit alleges alarms showing an inconsistent power supply on the Dolly sounded off before leaving the port of Baltimore. Baltimore City Councilman Zeke Cohen.
This is about Baltimore uniting together, standing strong amidst this tragedy, and making sure that people are held accountable that played a role in it.
6 construction workers on the bridge were killed. The Senate is returning to Washington to vote on a $95 billion war aid package to Ukraine, Israel, and Taiwan. Lawmakers today are taking the final steps in Congress to send the legislation to President Joe Biden's desk after months of delays and contentious internal debate over how involved the U.S. should be abroad. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 up more than 1% to pull farther out of the hole created by that 6-day losing streak. NVIDIA leading the chip makers higher. And a report on U.S. business activity that was weaker than expected. That's helping support the market. It's giving a lift to the idea of rate cuts. That's the reason behind that. Danaher helping push the S&P 500 up. It's among the leaders in the index right now, up over 7%. It reported stronger profit for the first quarter than analyst expectations. Steve Chivarone at Federated Global Investment says right now stocks are the place to be.
And with the market repricing higher, bonds aren't all that attractive here in a rising rate environment. So you look out, the economy's still relatively strong, the consumer's hanging in there, earnings are doing okay. How do you not want to own equities?
The main event arriving after the close of regular trading. That's when Tesla becomes the first of the Magnificent Seven to report its first quarter results. Ahead of that, those shares today up 2.6%. Overall, the S&P 500 up 52 points. Again, that's a rise of just over 1%. We're at 5,063 on the index. The Dow Jones Industrial Average 203 points higher, and the Nasdaq 100 right now up 240 points, a rise of 1.4%. Two-year yield down 3 basis points. That's at 493. The 10-year yield is 2 basis points lower, and that is at 458. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. We appreciate it. Emily Garfeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube.com. So head over there and search Bloomberg Podcast. I'm in the process, thanks to Emily's tip, I'm in the process of logging into and loading ClearSpace onto my phone, the app. And that is to self-limit my use of certain social media things that I feel like are wasting my time.
Yes, it blocks your access to the apps, and it actually makes you do a breathing exercise.
Oh, of course.
And it gives you a quote, an
John.
inspirational quote before you log on. So you really have to question, do I really want to open social media right now?
This is like the lock on the liquor cabinet.
Yes. That's the analogy, that from our generation. That brings us to TikTok. Because that's a lot of what people are concerned about in TikTok. It looks like they might be banned here or forced of a divestiture. I don't know what's going on since I'm not a TikToker, but I know it's huge because most people are on TikTok. Matt Schuttenhelm, I don't know if he's on TikTok. I'm going to guess no, but I don't know. He's a media litigation analyst at Bloomberg Intelligence. Yeah, he's a lawyer, but we talked to him anyway because he's really, really smart. Matt, can you tell us what's going on with our good friends at TikTok? What is Congress looking to do?
Yeah, so this bill is really advancing in Congress faster than I think many of us expected. The aim of this bill is that to force a divestiture of TikTok from ByteDance, which is based in China and is the parent company here. And basically the bill operates by saying if that divestiture doesn't happen within 270 days, or maybe there's a potential 90-day extension of that, if that divestiture doesn't happen, then TikTok can't be hosted in app stores, or it can't be there can be no web hosting of the app. So it's effectively a ban if that divestiture doesn't happen. And so this has cleared the House of Representatives on Saturday. That was their second vote by an overwhelming bipartisan majority. Today, it's teed up in the Senate. And this is tied to the Ukraine foreign aid package. And so it's going to be very unlikely for the Senate to resist it. So very likely that this becomes law. President Biden has said he'll sign it. And so I think we're off to the courts now on this question.
What is Congress most concerned about when it comes to TikTok? Why have they introduced this legislation?
Yeah, I think it's really motivated by two concerns. One, it's a concern about access to all of this data. We have 170 million Americans on this. TikTok is collecting all of their data about what they're clicking on, and potentially China has access to that since ByteDance is located within China. And the other concern is a propaganda concern. How much can China play a role in dictating the messages that TikTok prioritizes and what the messages that it's declaring to our youth, that are using this so often. So it's sort of those dual concerns that have really driven this.
Hey, Matt, what have we heard from ByteDance, if anything? What do they intend to do if Congress passes this?
Yeah, I think they've signaled pretty clearly that there will be a lawsuit to challenge this, and so I think that's going to be the next stage. So we saw this when President Trump, before he was against a ban, he actually tried to ban TikTok in 2020, and there was litigation about this brought both by TikTok and by TikTok's users. And here, the bill itself tells us what court that's going to go to. It's the D.C. Circuit here in Washington. And so I think ByteDance and TikTok are very likely to very soon bring this lawsuit challenging Congress's action.
I think everyone who's on TikTok wants to know, is TikTok going to be banned? What is the likelihood right now that in a couple months, people in the U.S. won't be able to use the app?
Yep. So right now, there's three moving pieces here. So one, will Congress pass this? And I think the answer is very likely yes, and that's likely to happen today or tomorrow. President Biden will sign it. Then there are two other moving parts. One, can TikTok win in the courts and stop this with a First Amendment challenge? I don't give them very good odds to do that. I give them only about a 30% chance to succeed with the court challenge. Then the last moving piece is, can there be a divestiture of the app? And that one's sort of the big wild card, because what we don't know is whether China will permit a divestiture or not. It has signaled that it won't approve something like that. So even if you put that at a toss-up, 50%, and you say TikTok has a 30% chance in the courts, there's a fairly good chance that the app does disappear in the next year.
How do you ban an app? I mean, how do
you
do
ban
it technically?
Yeah, so technically the approach here is to prevent it from being carried in app stores. It can't be updated and made accessible to users in the United States, both in the app stores, and then it can't be hosted. So this app has to sit on a server somewhere in a way that makes it accessible. And the approach in this legislation is that if any company makes it accessible through web hosting or through app store access, that they are subject to significant penalties and fines in a case brought by the FTC. So that's the enforcement mechanism here. It's not directly against ByteDance or TikTok. It's against those that would make the app available.
Well, can't I just have some server in China or somewhere else, overseas, do it?
That might be the workaround. Maybe they'll try to do something like that, and then you have a question of how well the U.S. could enforce that. But I guess that would be maybe the next move if everything else is failing for TikTok.
All right. So, but the bottom line is, for you lawyer types, you think this is going to go to the Supreme Court?
Well, the D.C. Circuit gets it first, and I think there's a decent chance that the D.C. Circuit is the final word. I think if the D.C. Circuit were to rule for TikTok and to say that there is a First Amendment challenge, that's really going to interest the Supreme Court. I think that would motivate the Supreme Court to take a look at it. If the D.C. Circuit issues a definitive ruling upholding Congress's law here, maybe the Supreme Court says, look, the D.C. Circuit got it right. We don't need to take that up.
Okay. All right, good stuff. That's why we like talking to you. We get it straight, the straight poop on all the legal stuff. He gives you like percentages of what can actually happen.
We love
that's why we love talking to Matt Cheltenham. He's one of those people that doesn't carry cash. That's the big mark against Matt Cheltenham. Otherwise, he's a great attorney and a great litigation analyst for Bloomberg Intelligence. But he's like the kids; they don't carry cash.
We don't need
How do you buy a bottle of water sitting on the corner?
I had a food truck outside the office. They took Apple Pay.
They took Apple Pay. All right, there you go. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company news we're following. The blank check deal that brought Donald Trump's media startup public, set to give him another $1.3 billion in stock after meeting certain targets. Yet he remains unable to cash in on any of it. The former president insiders said to receive 40 million shares of Trump Media and Technology Group to split as soon as today's close after they fulfilled terms related to the so-called earnout. 36 million of the additional shares are earmarked for Trump. Even as Trump and other insiders' paper wealth grows, they're currently unable to sell any shares until September because of a lockup related to the deal. And the shares of DJT down about 9% today. Elon Musk's social media platform X launching a TV app, pushing deeper into video and entertainment content as it takes on the likes of YouTube. X didn't confirm a date for the platform's release, but said it would be coming soon to most smart TVs. Additionally, the company touted the ability to cast video from smartphones to bigger TV screens through the app, a move that Google and Amazon have also made in recent months to allow the use of their own operating systems to be more compatible with sharing video content to other devices. And finally, the new presidential helicopter has been demoted to backup duty. That's because Lockheed Martin still can't figure out how to keep it from scorching the White House's south lawn. I don't know about you, but if I'm going to get a helicopter, I want one that spits out fire and scorches the lawn. This is the VH-92 Patriot, landing now, for the time being, only on paved runways. And that is your company news.
It's a high-class problem to have.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we're looking at the market real quick here. The S&P 500 is up 1%. The NASDAQ up 1.4%. We got yields coming in slightly. The 10-year Treasury 4.58%, down 2 basis points. WTI crude oil, that's up about 1% here, just under $83 per barrel. Gold, just a little bit lower. And Bitcoin absolutely unched on the day at just 66,500 per token. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Emily, John. Former President Trump is back in court today for his hush money trial in New York. Before testimony, a hearing was held. The prosecution is pushing to hold Trump in contempt for violating a limited gag order that bars him from attacking witnesses and jurors. Prosecutors say they have social media posts from Trump where he attacked Stormy Daniels and his former fixer, Michael Cohen. After months of delay in action by the House, the Senate is taking up the measures to aid Ukraine, Israel, and Taiwan with the support of the leaders of both parties. Bloomberg's Irv Chapman reports from Washington.
Majority Leader Chuck Schumer put the package of bills before the Senate.
The House of Representatives at long last approved essential national security funding. Let us not keep our friends around the world waiting for a moment longer.
Republican leader Mitch McConnell noted that he'd urged presidents of both parties to arm Ukraine.
The responsibilities of leadership, the value of alliances. These are foundational principles. They're not driven by the fickle politics of any one moment.
McConnell urged members of his own party, as he put it, to dismiss the myth of isolationism and abandon misguided fantasies. In Washington, Irv Chapman, Bloomberg Radio.
The FAA is now investigating another set of close calls at U.S. airports, including an April 17th near miss at New York's JFK involving a Swiss air flight that had to halt its takeoff moments before disaster. The pilot began to speed down the runway when he was forced to abort after spotting 4 jets preparing to cross the same runway. Aviation analyst John Nance spoke to ABC.
Moving 4 aircraft across an active runway and one controller not talking to another indicates a special level of stress.
This near miss came just a day before another near catastrophic close call at Washington's Reagan National Airport. A JetBlue flight cleared for takeoff was forced to slam on its brakes after air traffic control noticed they cleared a Southwest plane to taxi across the same runway. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Emily, John.
All right, Michael Barr, thank you so much. We appreciate it. So, Emily, you don't use Spotify?
No, I do.
You do use Spotify, okay. But do you use Instacart?
Not really. No, I live across the street from a grocery store.
Yeah.
So, but I heard a lot of people in Manhattan only get their groceries delivered.
Well, my 19-year-old son is a freshman in college. I saw that charge pop up on the card. Put a freeze on the card for a week. You're
I've
not,
had the same experience.
I mean,
like
a $15 McDonald's order becomes $25 or something.
Because of the fees.
The worst economic model I've ever seen for a consumer, yet they all do it. But anyway, Instacart shares, they're sinking on Tuesday after Amazon.com introduced a grocery delivery subscription benefit to Prime members, of which I think I'm one. However, analysts said the move looked overdone. But Bloomberg Intelligence writes that Instacart's, quote, smaller size and singular focus on grocery delivery puts it at a greater risk than DoorDash and Uber Eats to competition from Amazon.
I just don't think there's any brand loyalty when it comes to grocery delivery services. Yes. You're just going to shop around, open up the various apps that you have and just pick the one with the lowest fees.
Well, that's what I do for, say, Uber and Lyft. Matt Miller does not. Matt Miller does Uber. He doesn't price, and it can be 10, 20% difference.
Exactly.
It's just Matt Miller. When you got Matt Miller money, you don't have to worry about that kind of stuff.
He's a car guy.
He's a car guy. What does he know? Exactly. So there were Instacart's shares sinking here. Good day for the markets. We're keeping S&P 500 up about 1%. So we'll keep an eye on that. Earnings after the close with Tesla. I'm tuning in. Balance of Power with Joe Matthew, Washington, D.C. He's got all the news from D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
It's the last mile on Capitol Hill. Welcome to the fastest show in politics as the Senate now prepares to vote on a foreign aid package to fund Ukraine and Israel, but not before one last spasm from the left and the right. We're going to walk through it together here, and we'll get the latest in just a moment from Zach Cohen of Bloomberg Government. He's live on the Hill right now. We'll have insights ahead from former Republican Congressman Bob Inglis. Testimony resuming today in Donald Trump's criminal trial in New York and his primary day in Pennsylvania. We'll have a lot more on these stories with analysis from our panel today. Bloomberg Politics contributor Rick Davis is with us, along with Pat Dennis from American Bridge 21st Century. So let's get to it, as always, with a look at Wall Street. The markets now with John Tucker in New York. Hey, John.
Hey, Joe. And the markets are higher, adding to yesterday's gains. All of these stocks known collectively as the Magnificent Seven, they're pushing higher right now. And, of course, the main event, I'm going to say, that comes after the close. That's when the first of that cohort reports earnings. Talking about Tesla. Tesla shares right now are up about 2%. Shares of NVIDIA leading the chip makers higher today. And the earnings roll on. We'll do a bunch of them, but let's start with Spotify. They're surging, shares surging. Say that 10 times fast. The most in almost 2 years after the streaming giant reported that it swung to a profit in the first quarter as the company boosted subscribers. They also added some new features. Meantime, Darryl Cronk of Wells Fargo spotting opportunity and also areas to avoid in these markets.
I think right now you still have to focus on places that have shown the quality leadership: industrials, energy, materials, some of the pro-cyclical nature as the economy does recover. We're fading a little bit more of technology. We think financials may be a little bit overbought here.
After its earnings report, shares of UPS, United Parcel Service, those shares up 1.8%. Now, overall, the S&P 500 pushing higher, 48 points higher. That's up close to 1%, above 5,058 right now in the index. The Dow Jones Industrial Average up 171 points. And